How are we all doing? Happy, where are we? Wednesday, FOMC day. Well, FOMC announcement, not a meeting, not a rate, but an FOMC day nonetheless. How are we doing? Morning, Steve, Crum, Amy, Virginia, Burke, Virginia, Dax, puking. Yep, is this morning. Morning, John. Morning, Peter. I've got a new mouse, and the mouse wheel is crazy. I like it. My old mouse wheel had was a mouse wheel where you move it and it clicks, so you scroll down like that. This one is a free wheel, so you can literally go wee, wee, really, really fast. But it's actually impossible to stop it and control it where you want it to be. It's just a mind of its own. Look, see, I did not do that. The wheel is still spinning after I'm not touching it. Waste of 30 quid. Anyway, so how are we all doing? Morning, Marco. Morning, Thomas. So there was no news yesterday. So obviously wasn't here yesterday because it was 4th of July. Not a lot happening in the markets, although there was a lot of movement yesterday, actually. But US markets were closed. Overnight wise and yesterday during the day, very little news, nothing really at all. So nothing exciting has happened there. Main news, obviously, yesterday was the Royal Bank of Australia's cash rate announcement, which we got a 4.1. I was kind of anticipating an increase on this, but we didn't get it. So we had the two increases unexpectedly, the previous two releases, but this time they decided to keep it as it is. So if you look at the Aussie pairs, we didn't get a massive movement off of it yesterday. We got a drop and a correction. So opened there, closed there on the Aussie CAD. Aussie Swiss, little bit of bullish movement, mainly off of Swiss franc and euro weakness that we had yesterday. Aussie yen, not really gone anywhere. Aussie New Zealand dropped a little bit. So the New Zealand dollar got a bit of a rally off the back of the weakness in the Australia. And Aussie US, a little bit of a push up there, but that was mainly off the back of US weakness. So nothing really happened off of the back of that. The market was expecting a 4.1. It got given a 4.1. It's not particularly good news for Australia, not particularly bad news. Although I think they should have done more. So I think the market, I did not move that. I think the market will probably frown on that rate. This is going to drive me nuts. There must be a way to lock this mouse wheel. I've got lots of buttons on this mouse. I haven't actually looked at the manual yet. Ah, there's a button. It's got a button that can do the old clicky thing. There we go. That's better. Fixed it. I haven't even looked at it yet. Anyway, morning Baggy, morning Shroud, morning Christian. Double click the wheel. No, there's a button. I bought one of these. I can't get it in the way, but it's a Logitech mouse with it's a gaming mouse. It's got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 buttons and the mouse wheel. I only use 2, left and right, and the mouse wheel. So I've discovered one of the buttons locks the mouse wheel so that you can go click, click, click rather than spin. Anyway, I fixed it now. So don't need any more solutions. Right. DAX is collapsing this morning. We've got a gap fill in place, in play rather. Let's just quickly look at the DAX just to remind us where we are. We got 3 minutes to the open. So last week we were looking for these gap fills from here. That one, that one, that one, and that one. We've completed all but the very top. So this one might be an orphaned one. We left a gap in play on Friday last week, I think it was, wasn't it? Where are we? Wednesday, Tuesday, Monday, Friday. So we left a gap fill Friday, which has just been completed. So that is now the gap fill complete. We've left the gap back to the upside. This market is really, really gappy at the moment, which is fantastic because it gives us really good targets. So morning, pot guy. So at the moment, obviously, the DAX is selling off very, very hard. The day after a bank holiday in the US, you tend to get a lot of volatility because there's a backlog of orders basically to complete. So with the stock markets, they do sector purchases. So they'll buy the tech sector, the motor sector, healthcare sector, et cetera, et cetera. So when there's been a bank holiday in the US and there's been no trading, there's a backlog of orders that builds up. So sector purchases don't tend to happen in the other indices because there's not enough volume there or enough people to buy and sell from and to. So you tend to get large movements. So the DAX looks like it's kicking off with a lot of volatility this morning. It's going to be a very hard opening range breakout to do today. So up to you, but your 15-minute pre-market, something like that, it's just a mess. So your 5-minute pre, we've put a lot of volume in already, so this might not go very well this morning, but see what happens with it. It's up to you what you want to play. But there's a gap fill play to the upside, so there is a target to the upside there to go for. Got 1 minute to go. News today. We've got the OPEC meetings all day today, which will affect oil. And we've got FOMC at 7 o'clock this evening. So this is not an FOMC meeting where we have the rate announcement, we have the meeting minutes, and then we have the press conference. Those are the ones that tend to go a bit crazy. The FOMC meeting minutes are basically their last meeting and their decisions from that meeting. So it's something that sometimes gives us forward guidance, sometimes gives us absolutely nothing we don't already know. So it's very, very hit and miss, FOMC. Quite often you will get a whipsaw, though, because they'll read something, react to it, then they'll reread it and go, actually, and then undo it. So you do tend to get a lot of volatility off the FOMC meeting minutes, but it's not necessarily something that's going to make a big wave this evening. So main thing today is OPEC. So watch the Canadian dollar, watch oil. Those are the things that are going to move today. 10 seconds to the open. I can tell you I don't think this is going to take a trade this morning, but up to you what you're taking, obviously. But the 5 minute is probably, oh yeah, it is. No, the 5 minute range is pretty good. So going with the 5 minute range, although only seems to have taken, oh no, there we go, sell stop soon. So 5 minute pre-market range today was pretty good. 15 is too big. Long. I get a feeling this might be a bit whippy. We've had so much volatility at the open. It would make sense that the initial cash balance isn't going to be that big because they've just dumped an absolute ton in the market before the before the bell went. So we'll see what happens. Morning, Stevie. FX wise, God, that is really slow today, isn't it? Yeah, there's no volume. Look, you see that just jumped. It's jumping around a lot. There's not a lot of volume in the market. They've done what have they done? 72 points. They've done half an ADR in the hour before the market opened. So it's a big pre-market move there. Euro New Zealand. Have a look at that in a second. I just want to see what happens with this open. Give me a sec. Right. So yeah, DAX long. We'll watch that and see where we go. So Euro New Zealand. So far today, no ADRs, no weekly hits. We had some ADRs yesterday. We'll have a look at everything today. I'll go through all the pairs today and we'll have a look at everything, what's going on. But there were some ADRs yesterday. Why is Euro US dollar and Euro pound showing as zeros? Weird. Okay. Weird. Data disappeared then. So Euro New Zealand, looking for longs. Yeah, so I put a post in the Telegram group about this yesterday. We were flying down yesterday towards this low, and I said, watch for signs of a bounce there, signs of a reversal alert on lower time frames. Didn't get one, just went parabolic straight through it. So this was an ADR yesterday. We got 200, so about 150 ADR roughly off of this yesterday. Then a nice big rejection, and we're still sitting down there at the moment. So big H1 RSI extension, as you can see, got an order on there, entry long. M5 reversal alert was there at ADR as well, a 150 ADR, just sitting there at the moment. So you've just had an hourly market reversal alert. M5, you'll have had one in there as well this morning that just happened there. So yeah, I've got a long on from there yesterday. So that was the reversal alert yesterday there. But didn't go anywhere after the drop. So Euro had a big drop day yesterday. Not quite sure what happened to the Euro yesterday, but market basically sold off quite hard on the Euro. Not massively, but that's where your ADRs were yesterday. All the Euro pairs came down hard. New Zealand dollar rallied massively off the back of the Australian dollar rate announcement. So that's obviously why we've got the bigger move on the Euro New Zealand, because that's the one that moved the furthest yesterday, the New Zealand dollar. Sorry, one sec. Just trying to do something over here. So yeah, so good looking long. I'm in long on it already. We've had no profit take on this move. So we started that high, pushed. We had an accumulation for a day, pushed again. So there's been no profit take move at all on that. You can see we've got big propulsion gap targets to head back for. So looks good for longs. Absolutely no reason why the Euro shouldn't be a long at the moment. It's bullish. Rates are going up. So all looks good. Whipsaw on the DAX. So hedged on the DAX at the moment. See which way that decides to go. So DAX yesterday, if you did trade the DAX yesterday, I was just, I left this running yesterday just to test, just to continue testing, basically. I was hoping yesterday we were going to get really wide spreads. We didn't get very wide spreads with Robo Forex anyway. I just wanted to test what happened in wide spreads, but we didn't really get. But it basically whipsawed, obviously, at the open because there was no volume. Got a short on and a long. I decided to just close out the short, basically. I just wanted to test that it did stuff, which it did. So the short trade yesterday worked a little bit, but didn't get down to any discernible targets on anything yesterday. So it was all, as we expected, crap, which is why I took the day off yesterday, because nothing ever moves when it's a bank holiday. So just pull back into the range there. So your 5-minute ORB on the DAX is there. So wait for a break of that 5-minute candle. There's no volume today again. That is weird. Just did it all before market opened, which is weird. But anyway. Right. So ADRs, nothing. Weeklies, nothing. Obviously, there's nothing on the monthly yet. We're too close to the beginning of the month. RSIs, we've got a few to look at there. I'm going to whiz through every pair, though, rather than just going through the RSIs, just so we can have a look at everything and, just sort of catch up. Closed out stuff yesterday. Well, I've closed out stuff all week, actually. But what did I close out yesterday? History. I was looking at some EAs yesterday in the marketplace as well. Just it always interests me when I see all these what the best-selling EAs and stuff are, yeah. And these guys that have signals running, like I don't know if you're familiar with, most people probably familiar with the gold one, yeah. So there's this one here, gold stuff. Real-time results can be viewed here. oh, it's gone. Why is it gone? Because it blew the account. So it's the best-selling EA on MT4 because it had a lucky run, because somebody built an EA, they curve fit it, they set up a signal, it had a lucky run, everyone bought it, it blew the account, off they go to something else. It happens all the time. So even the signal that this guy's got running from his EA that he sells is blown the account. That's rubbish. So I was just going through them all yesterday. I spent a good sort of 2 hours yesterday going through all these top-selling, most rated EAs. Hey, look, there I am. Just to see, just to have a look at them all, really. And I was just trying to backward engineer them, really, and just see what type of systems and strategies they were running. They're all utter curve fit rubbish. The whole lot. It's bizarre. And some of them, you like this one, Top Secret, right? It's only been out for since the 1st of July, right? 1st of July came out. So we're on the 5th of July now. So it's been out 5 days. Bought it and tests are good so far. Made 2 trades, both ended in profit. Will update after a month. Great, good result. Backtest is promising. Real account, IC markets with good results. Good job, incredible work. Best EA of 2023. They're obviously all fake reviews, just to get them to the top. And then you get someone that's actually bought it. Scam EA, don't buy it, you'll be deceived. It's just this marketplace, just love it. Anyway, sorry, I got distracted. So what have I closed out? So far this month, New Zealand dollar Swiss. I'll just move down a little bit. Keep an eye on the DAX. Okay, DAX long is working. Your opening range breakout is to the upside. So we'll see if that's the peak formation low, and we're going for the gap fill play today. So New Zealand dollar Swiss, closed that one out on Monday. I think we looked at that one already. Got a sell short on that now as well. So that went RSI extension to RSI extension. So short on that now. So basically we got in on the low, got out, entered on the high, only just hit that. We are extended again though, so I'll be taking your next entry up there. Aussie dollar CAD closed out. I closed this one out basically on that pullback basically. So I put a trailer on this. Obviously still got other long positions on this one, so still long on it. But I put a trailer on it just in case the news was catastrophic for the Aussie and it collapsed. It did come down, it stopped out, and then it pushed back up. So still in it long, still got a position in profit, but that one was closed out. Same thing for the Aussie dollar, US dollar. Closed that one out there. So just basically went for, I think that was an ADR. I got out of that one. So 63, yeah, exactly. Got an ADR, which is fine. So one ADR profit on that. Didn't want to push it any further, obviously, just in case the Aussie dollar collapsed. But that pushed down. I had a break even on it, basically, and it pushed up into target off the news. Closed out the pound yen. That was an aggressive drawdown control position, which got closed out. Oh, they've just closed out this morning, sorry. And another one there. Yeah, £2 yens, basically. So these yens, absolutely bizarre. We're going to look at all the yens. So we'll look at those in a sec. But yeah, all these yens still waiting. There's no news from Japan yesterday or this morning at all. Mainly because obviously the market has listened and has frozen. So money market June, investing in the pound. So yeah, so we've had big freezes across all these yen pairs. So Aussie dollar yen. Yeah, so we pushed up. Obviously, we know we pulled back down again, completely sideways now for 2 weeks on the Aussie dollar yen. The CAD yen pushed up. We're now 1, 2, 3, 4, 5, 6, 7, 8 days. And look how it's contracting. Yeah, it's getting tighter and tighter and tighter. Something is going to pop on this. If this decides to pop to the upside, that intervention is on its way, I think, this week. If the Canadians and the US decide to rally against the yen, I think the yen will just basically do it. It'll be gone. So CAD yen stuck, Swiss yen stuck, Euro yen stuck, pound yen trying to rally this morning. It's going to stop me out, and then it's going to come back down again. That's what happens when you use stops. New Zealand dollar yen. So that has made a rally yesterday because obviously the Australian dollar weakness. So that actually did manage to make progress. They're not that worried about the New Zealand dollar, so that's fine. And US dollar yen completely sideways. So we're now off the 145 level, this orange line that I put in last week. That is the level we were looking for a reaction. We got the reaction at 145, pulled straight off of it, put the reverse alert in. Now we're on day 3 sideways. So this is day kind of 5/6 sideways. So every single yen pair has basically frozen, halted. They basically put the scare tactics, which they always use out there. They're saying that if we see any more movement in FX markets that's undesirable, does not fall in line with our fundamentals, we will intervene, blah, 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 blah. Market stopped. So question is, what is the market going to do next? So if we get a rally above that 145 level on the US dollar yen, because that is the main currency that the Japanese are looking at because their exports are in yen, which is where we got the first intervention last time, we will likely get across the bow intervention, which will be sort of 300 to 500 ADR. Then it's up to the market to decide what it wants to do. Obviously, you know what happened. I've talked about it enough in here previously. So it's just weird. I haven't seen it freeze like this before, which is bizarre. So the market literally, all these yens are literally just stuck, not pushing, not pulling, nothing's happening. So they're kind of waiting, I think, for someone to make a move. It's just like a kind of standoff situation. So I'm not quite sure what's going to happen with the yen, but obviously if you've got the yens all short, i.e. you're long the yen, it's just a case of waiting really to see what happens. But they are all totally stuck. DAX is broken long, so your 5-minute ORB today is looking good so far. So watch the exchange open and obviously the gap fill for targets. So potentially bounce. And then obviously we're 3/4 of the way to ADR as well. I've also got yesterday's low there as well. So not that yesterday's low I think is going to make a lot of difference today. Obviously yesterday's range was microscopic. So that is yesterday's low though. So we might get a reaction off of the selling at the low. We'll see. So stopped out on the short, bit long. TP1 is there. Right. Just catch up on the chat before I go through everything else. Morning outro. Morning Brian. Double stop out on the DAX today. Yeah, you would have double stopped out on the DAX today if you took the 5-minute pre-market. Whipsaw. Some days it's good, some days it's bad. Keith, I have that one. Gold stuff hasn't done much, yeah. Do you actually know anyone else who's developed a profitable EA? No. Depends if you include strategy quant in that. Commercial EA, no. You know, I've said about this before many times in here. Wonder if there's a Zoltan EA. I'm going to go check. EA development, the 90% of the stuff you see in the market, all these EAs are curve fit. Yeah. So I can't remember which one it was. There's one in here which just proves the point. I think it's this one. No, it wasn't that one. Anita. No. Was it gold stuff? I told you how to test it. No. I don't know, but there's that one, prop firm one, maybe. You know, but like I said, didn't I? They're all going to start calling them AI. Because it's the thing to call them. It's AI. It's the new thing. Let's build an AI EA. But there's one in here. I can't remember which one it was. It told you how to backtest it. And it basically gave you instructions on how to backtest it. So basically what they've done is they've basically done exactly what I do in here on a regular basis. They've got an EA, they've got variables in it, they backtest it over a period of time, and they pick the EA settings that are the very most profitable over that period of time. Yeah. And then basically what they do is they tell you to backtest it over that period of time. So they say, put it on the M5 chart, put it on gold, select this time as the start date, this time as the end date, and then run your test. And everyone goes, oh, wow. Well, of course it will, because that's the curve fit backtest. It's going to produce the same result, and it's going to be massively profitable. Take that and then backtest it over that period. And everyone wonders why it don't work, because every single one of these is curve fit, or it's a strategy that has a short lifespan because it's trying to do something with too many indicators, too many EAs, and that they all have this kind of proves the point. Real-time results can be viewed here. No, they can't, because it blew the account and you took it away. And you set a new one up. Look, all these backtests. This EA has been out. How long has this EA been out? It's years, isn't it? Oh, one. March. Oh, this is a new version. Yeah, so he's re-released the robot as well. But this is a new version from March, right? It's been out from March. The backtest results are 3 weeks old, 1 week old, 3 weeks old, 1 week old, 1 week old. Load of rubbish. It's all a load of rubbish. Anyway. Yeah, get sidetracked today. Not going to go slagging off everybody's EAs. I'm sure there are some profitable ones out there. But like I say, I don't profess market reverse alerts EA. You do what you like with it. I never give you any guarantees about anything with anything. It's an EA to semi-automate your trading. You're the trader. You watch the charts. Yeah, let the EA take the trades for you, like this morning. But if you don't like the look of this, right, stop it. Yeah, it's taken the trade. It's automated the entry on the opening range breakout. It's your job to watch price action and see what happens, and make a decision as to whether to get in, out, stay out, move these to break even because you don't like the look of the price action. Yeah, if you leave it running, yes, there's a long-term edge, but you're a human being at the end of the day, so trade. Anyway, there is 3 developers, a dozen EAs. Most of them are the same. Yeah, probably. A lot of the stuff, like there's Darwin. There's like we just saw in there, the Darwin ones. There's one called Darwin Evolution. There's one called Darwin 2. There's another Darwin one somewhere as well. And then you got this guy, the New Genius AI FTMO. The New Genius Candles AI. I backtested these. I downloaded them, backtested them. They take almost the same trades. One of them tells you what it's doing. The other one doesn't tell you what it's doing, but it'll pass your FTMO challenge if the conditions are right. If you start an EA when it's going to have a good run, it's going to pass. If you start an EA when it's going to have a bad run, it's going to fail. Put the word FTMO in it, everybody thinks it's a prop firm one. XT prop firm. Forex tools for traders. It's not. You're targeting people that are wanting to pass a prop firm evaluation. It's just all gimmicks. It's all total rubbish. You can't just get an EA. You can use an EA if you know what it's doing and you understand what it's doing, and you can use it as part of your strategy. But there aren't any set and forgets. Well, if there are, I haven't found them in 15 years anyway. But strategy quant is a little bit different. That's developing long-term investment EAs and backtesting them, which I do know people that have got portfolios of strategy quant EAs that are working. I had as well. I just don't like it. I'm not a long-term investor. So I haven't got enough money to make it worthwhile to do, basically. Triggered short on EU back into the range. Let's have a look at Brian's strategy. So Brian's trading the 4-hour pre-market. Oh, that's a big wide one today. Triggered short. flip long. Today. Morning, Clarence. I stand corrected. Stopped out short, triggered long. Oh, there you go. 1 hour hit. There you go. Good job. Right, let's go through the FX pairs. Stop waffling on about stuff. Right, Aussie dollar. So looking at the buyer scorecard for the Aussie dollar and the fundamentals. Oh, I'm liking this mouse now. The other weird thing about this mouse is it's got weights in it. You can put your own weights in it to make it as heavy or as light as you want it to be. It comes with weights you can put in the bottom. Talk about gimmicks. So Aussie dollar, 4.10 interest rate change, inflation at 7% and coming down, unemployment still coming down, which is good. This is why I thought they would probably give us a little bit more of an increase, because their unemployment's coming down, which gives them some wiggle room right now to move it. They didn't do it. So we are still on 4.1, which is still lower than a lot of others. Inflation is still massively high. So from a fundamental perspective, I don't think that is going to be good for the Australian dollar. When you look at the Aussie dollar across the board, the vast majority of everything is sells. Sell against the Swiss, sell against the New Zealand, sell against the US, sell against the CAD. Fundamentals are bearish. Market positioning is bearish. Retail are all long. Bearish. So it is a sell across the board at the moment, the Aussie, from a fundamental perspective. But as we know, we're seeing things not react properly to fundamentals as we would expect. So we will see what happens over the next couple of days with the Aussie. But Aussie CAD, basically, we're just running up into propulsion. Let's just have a quick look at oil before we go through everything, because we need to know what's going on with oil. So the oil trade that I called out last week on the break of that high off of this kind of like a quintuple bottom, if you like. So that was the bounce play that we took off of that area. Yeah. Got the lovely bounce straight up into the trend line, which is where I got out. And then we came back down. So at the moment, we are holding at the minute. So yesterday, we had a bit of a rally day. Today is OPEC day. So throughout the entire day today, OPEC will be deciding what caps to put on production of oil, whether or not the supply-demand balance is shifting. There's all sorts of stuff that they talk about. But at the end of the day, they come out of the OPEC meetings with a plan. And that plan will decide whether or not production will be increased or decreased. So decreased production is bullish. Increased production is bearish. Where we are at the moment with oil is completely sideways. So this is obviously that descending trend line that we were looking at. And that's exactly where I took the TP. Couldn't have got it any cleaner, basically. It got out on that propulsion gap, on the low of that propulsion gap. And then immediately it reacted straight off of there, as we said it probably would, because everybody can see it. Therefore, everybody will do it. So they did. But now we are sideways. So today is the day we decide whether or not we're going to rally for these highs and try and get that break up to $95 a barrel, which is what Goldman Sachs and the other institutions called by the end of the year, or whether they're totally wrong and there is just no demand anymore. Therefore, supply will build and price will drop. So we'll see what happens today. But oil is there. And obviously the Canadian dollar, which is why I'm talking about oil, is a big exporter of oil. A lot of its GDP comes from oil. And at the minute, against the Australian dollar, we are kind of flagging a little bit, potentially looking like we should push down. To do that, we're going to need oil to rally, because it needs to push the Canadian dollar. So there's a lot of things at the moment to do with Aussie dollar CAD specifically, which are up in the air. We don't know how the market's going to react to the 4.1 interest rate rise. We don't know what's going to happen with oil. We will do tomorrow. So I suspect today what we'll probably get is something along those sorts of lines until we get some news come out of OPEC. And then we'll probably get some kind of movement started. So at the moment, I've got longs on it, but it's sideways. So entry initially was here, looking for this propulsion gap fill. And obviously since entry, it's put lots of propulsion gaps in. We're just coming up into these now. That's my target, these propulsion gaps here, which is 125 ADR. So best thing today would be for OPEC to say we're going to increase production. That will drop oil, which will rally Aussie CAD. That's not down to me, it's down to OPEC. Aussie dollar Swiss. So Swiss franc yesterday, Euro and Swiss franc yesterday had a really bad day. There was nothing in the news, it just sold off yesterday. So as you can see, Aussie dollar rallied against the Swiss franc. We've got the previous weekly high coming up there. We've got this propulsion gap out of this accumulation here to target. We've got a little propulsion gap target to the downside. So difficult to tell where this is going as well. If the Aussie dollar is going to remain short, this is a flag which we would expect to break to the downside. The Swiss franc should be strong along with the euro. Therefore, Aussie dollar Swiss should be a sell. But right now, like everything else, we're bang in the middle of nowhere. So last trade on that was here. As you can see, straight in, straight out, done. So nothing much to talk about on that one either. Aussie New Zealand. New Zealand dollar got a nice rally off the back of the Aussie dollar news. That's come down into support, which looked like it was holding and today has proven not to. Although we are bouncing at the moment off of yesterday's low. So potential that we're going to get a double bottom there. You're going to get the reverse alert on H1 and then push back up into some of these propulsion gaps. We've got these big ones up here, obviously, as well. So we'll see how we go with this. But Aussie New Zealand, I think potentially we'll get this gap fill done. Obviously, there's no way I was, after holding that for 4 weeks or so, there was no way I was holding for a big win on it. But would have been nice, should have done. So last entry on that one was that little long there. And yeah, haven't had an entry since. So just waiting on Aussie New Zealand, but more bearish than bullish. Main reason this is a sell at the moment is because of the retail positioning. So retail is long at the moment. If you look at Aussie New Zealand, where are we? Where are you? 73% of the market is currently longing it. Therefore, obviously, it's coming down. Oh, good one, DAX. Blimey. So yeah, so the market is currently longing it. They're just trying to catch the falling knife, basically. So still reasoning for this to come down and just keep on grabbing that liquidity, because that's where it is when they need to get the orders filled. Aussie dollar, US dollar, flagging at the moment. Again, 2 buys off of this. Really nice little buys on these flags. US dollar, I still have no clue. I'm really hoping we get some guidance in FOMC this evening as to what they're going to do with this US dollar. They've been very tight-lipped for the last week or so. I think since we've had this cloud of defaulting hanging over the US, defaulting on their interest rate payments, it's kind of shocked the market a little bit more. So we've always had this thing now for the last few months where every single negative news crashes the US dollar. Every single positive news kind of doesn't do a lot. So the market is looking for every opportunity to sell the US, which means that this is going to be a buy. We've now got the Aussie dollar potentially looking to weaken off the back of that interest rate. And we've got a weak US dollar. So difficult really to call a direction on this. If that is going to be the case, we should see nice movement because there's no advantage to either of them. So as you can see, a couple of buys on this recently all worked out very nicely. No reason why you shouldn't be able to take sells on it as well. Just wait for some kind of signal. There is nothing at the moment. We're just sideways. So, Henry, are there any dangers using EAs on prop firms? Only if they don't allow it. Read the rules. All prop firms are different. Some of them don't want you using commercial EAs because everybody uses the same one and it puts more exposure on them. Most of them don't really care. And there's a reason for that because they know that they're just not going to pass evaluations with them. So, well, people will pass evaluations with them if they let them. But the trouble is people don't let EAs run, do they? So that's... But read the rules. They're all different. David, still up and awake during the 4th of July here in America. Love to come home and be able to watch and listen to me. Ah, David, you must have better things to do, surely. It's the 4th of July. Well, it's not anymore. It's the 5th of July. Well done for staying up. Good job. So there's your Aussies. CAD, we've completely gone sideways on this. CAD Swiss just run into total equilibrium. Every single push we've had on the CAD has been pulled by the Swiss and vice versa. So we are just stuck sideways. So at the minute, you're not going to get any entries. As you can see, I haven't had any trades on this since May. Nothing. It's just violent move, correction, violent move, correction, violent move. It's just literally straight up, straight down, straight up, straight down. So there's no sustained strength in any direction. So it's range bound. So look for buys at the lows, look for sells at the highs until it decides otherwise, you know. So we've got these propulsion gap targets to the downside. So it's kind of a little bit more bearish than bullish at the moment. We're going nowhere. CAD Yen, we've looked at the ends. That's coming down this morning by those things. I say coming down, I mean, it's just moving down at the moment. And that's literally what it's been doing for the last 4 days, moving up and down. So we need a break, CAD Yen. So break of this low, yeah, will signal selling in the market. They will start to sell off and then we'll find support here. Yeah, so that's where the support is going to be, 225 ADR. If it can get a sell-off. But I mean, at the moment, as I say, it's not able to do anything, is it? Swiss yen we've looked at, same story. Euro odd. So euros, we should be looking for longs on all of these, ideally, because we should be seeing another 2 interest rate rises, which is what's been promised by Lagarde. So that should be bullish for the euro and obviously bullish for the Swiss franc. We've had a big multi-week V-shaped recovery. So yeah, I'd be more long than short on it. But there are propulsion gap targets to the downside. So again, no signals. Last sell was there. Got out 2 days later, waiting. Just seem to be waiting at the moment for absolutely everything. This market over the last 6 weeks has just been hideous. It's just either squeeze or nothing. We're not moving or we're squeezing. That's it. That's all we're getting at the moment. There's no market structure in anything. Nothing's just moving consistently. It's either like going parabolic in one direction or the other, or it's going sideways and not giving any potential mean reversion entries because it's not moving far enough. It's just intraday within ADR or everywhere. It's just nasty. Euro CAD, same thing. We're in a range at the moment. Managed to get a short off of that last week. Propulsion gaps all filled. There's your range high. There's your range low. Take some trades down there. Take some trades up there. Don't take any trades in the middle. You say? Do you think all summer will be like this? God, I hope not, Burke. If it is, it's a case of reducing RSI down to 14 so we can get a few more signals, basically. So if you look at where the signals are on this one, for example, there, you switch it to a 14. Yeah, we're going to get more signals. So we're getting entries there. Probably not there. You would have had an entry there. Yeah. So you'd have, those were the original ones you would have got, which you still would have got. That additional one there, you would have got entry, entry, exit, entry, exit, entry. So when we're going into tighter range conditions, ADR start to drop. If you reduce your RSI period, you're going to capture faster relative strength, i.e. more of the range bound movement. So, but that's a decision you kind of, the trouble with changing indicators and changing conditions on indicators is by the time you've identified you need to change it, you've missed it all. And the danger is you go, right, okay, this market is contracted, range bound, flat. Let's switch it down. And we did that beginning of the year. And it worked very, very well. But when you get the market return back to normal, you are in trouble because you've got in far too quick. And you typically find when the market goes back to normal, it takes off and it goes and you get into a little bit of a squeeze on something. And if it all decides to do that at the same time, you're going to be in a bit of trouble. So it's a risky thing to do. You're better off waiting for, if you notice a lot of the trades that have been in the last few weeks, like this one here, are straight in, straight out, which is absolutely beautiful, but you're not going to get that many of them, but it's safe. The only thing that's really causing problems at the moment is the yens. But the nice thing about that is the Japanese are renowned for intervening when things go wrong like that. So you've got them sitting behind you going, don't worry, we're going to press the button at some point. So difficult. It's a very difficult situation at the minute. But if it stays like this all summer, money will mostly be made out of scalping, which is what I had to do last summer. The reason I developed the opening range breakout EA was because I was using the Price Action Toolkit a lot last summer, basically just to scalp indices because there was so little opportunity for position trading because it was so tight. So the best way to make money is to scalp in, out, on in and out in 15, 20 minutes, half an hour, done. That's it. All you can really do. And obviously the best way to do that is find a is get on prop. The DAX is not going anywhere today either. So we'll see. So yes, Euro CAD, Euro Swiss, again, range high, range low. We got descending sort of weird symmetrical triangle thing going on. Need to zoom out a little bit to see it properly, but so there's your symmetrical triangle formation. 1, 2, 3, 4, 5. Waiting for the break. So we're going to break somewhere, but likely just going to push back up into range. So Euro Swiss sideways. Again, only 2 trades on this one. In, out, 2 extensions. Again, it's just, which is great. They're good. But again, I'd be happier longing anything euro. Mind you, Euro Swiss obviously is going to go sideways because it's a euro and a Swiss. They both push at the same time. But I'd much rather be happier longing stuff euro wise than not. Euro pound. Again, just a wide range at the moment. So look at the lows, look at the highs when we get those extensions into those areas. So again, euro pound, entry, exit. Entry, exit, entry, exit. Just waiting. So the market reverse alerts EA just taking all these extensions, taking the M5 reverse alerts, just going for those quick half ADR moves to the downside because that's all we're getting. Again, nothing extended there. Obviously, all targets to the upside on this euro pound. You can see all the old propulsion gaps are all filled. All the targets at the moment are bullish. Euro yen we've covered. That's having a little push this morning. But again, 1, 2, 3, 4, 5, day 6 sideways. So if we do get up to yesterday's high, previous day's high, which are these lines here, and obviously last month's high, sell it until it says otherwise. It's range bound for the last week. Euro New Zealand. Again, one sell there, buy there. There's a sell there. That took 3 to get out of that one. Again, just wide ranging at the minute. This is the original propulsion gap off the New Zealand dollar rate increase. So that with the New Zealand dollar rates rather, 5.5% on the interest rates. The market basically tanked completely on the expected rate, which we weren't expecting because it's not actually that bad for the New Zealand dollar. We came back, retested it, they bought it back up again. So market structure obviously is long at the moment. This is where you want to be buying it. Euro New Zealand, there's a buy-in at the moment off the RSI extension on the hourly from yesterday. So pushing up. Targets to the upside, I haven't put a target on this one yet. It's half an ADR. That's an ADR, roughly 160. I mean, if we are going to hold market structure on this, which we should do with Euro New Zealand, yeah, there's absolutely no reason why we shouldn't retest or break out of that high. So target all the way up there. But, I mean, that's a long way. 390 pips, which is 140 ADR. It's a long old way up there, but I won't hold it that long. I'll be out before that. We've got these highs here. So you've got this peak and that peak, which potentially might act as a zone for a pullback, for a continuation. So that looks like a good target, that propulsion gap there. So this propulsion gap and that propulsion gap, very small, but that's the accumulation that broke. So that's the break there, that's support, which is a previous resistance. So this would be the area I'd probably look at, 175 ADR. This area here as well, obviously this accumulation break, which broke down below that low, is a potential resistance area as well. So you may well get a price action off of that. And obviously if that happens, a lot of people will jump ship there. So that's Euro New Zealand and Euro US dollar. Sideways now for a good couple of weeks. We started going sideways on the 15th of June. We've had news events, but we've had no direction. Again, nothing's moving. It's just, we're seeing intraday movement. So on there's an entry there. Yeah, so there was a short entry there. There was a short entry there. And then it got in long there and out. Yeah, so as long as stuff is staying nicely range bound like this, if we are getting news which takes you to RSI extensions, get in, because at the moment there's nothing advantageous, bullish or bearish about euro or US dollar. The euro should be a little bit more bullish than the US dollar, and you can see that in the current price action. However, it only takes one shout from the FOMC to drive it back the other way. So, at the moment, we are kind of stuck. If it does rally, the market structure's absolutely beautiful on the euro US dollar. It's always pushing up and down. It's the most traded currency in the world, or currency pair in the world. So you always got high liquidity, which means it never moves massively, but it always moves on news, because these two guys are the biggest news movers. So, doesn't matter which way you take it at the minute, same thing. Let's look at the pounds. Holy crap, Bonita is up to 5,750 US. It was 3,500 last time I saw it. Was that EA? Yeah. See, this has been trading for 216 weeks. This EA, but look at the returns, right? This is a really good example of a system or strategy, or EA, if you like, that works. But no one will be happy with it. Yeah. So this is the account before the signal was launched, which comes in sort of around about 1,000 trades in. Nice, steady equity curve. Yeah. And the nice, steady equity curve continues. But look at the returns on a monthly basis. It's all over the place. Yeah. 0.06. But then we've got 37.2. Right. So out of that 115%, let's do the maths. And this is something you have to look at when you're looking at backtesting, right? When you're backtesting a strategy, there are trades or periods called outliers, which you have to exclude from your results, because the outliers tend to be caused by random events like the Ukraine war, right? So if you look at oil, just to explain an outlier. I'm going to have to go back. Okay. So if you've got a system or strategy, for example, that's trading oil, and it happened to take a long position there, let's say it was taking a 24 bounce, for example, and it made 37% profit on that peak. The Ukraine war is never going to happen again, hopefully, right? So this is an outlier trade. When you're looking at the equity curve, if you see any EA that has a nice little thing and then it has a pop like that, and if you look at it, 37% of the 115% made, roughly 40% of the profit was made in 1 month on one outlier event. Yeah. You've got to take that out of the equation because it's abnormal. It's not going to happen again in the future. So when you look at it, something that's got 105% return in a month, it hasn't returned that. It's never going to return that in a year, rather. It's not going to return that regularly, is it? It's an outlier. So you have to remove that sort of things. And when you're looking at these results, you see these like huge wins. The normal is going to be to return something between 0% to 3% a month. Every now and again, for some reason, it puts in a whacking great one. So you just got to look at it and go, there's something not quite right. Yeah. 28% drawdown. Yeah. 28% drawdown. There's no investor on the planet that's going to look at that and go, wow, that's good. And look at when it was back in 2022 in November. I don't know what this is trading. All euro, US dollar. What happens in 2022 in November? Where are we? Trying to see what happened to the euro US dollar in 2022. November. Trend shift. November. When we got the trend shift. It's that spike. There. So that tells me that this EA uses some kind of strategy that doesn't use a take profit, uses a trailing stop loss and got onto a run in a trend shift. How often is that going to happen? Once a year? Maybe, if you're lucky. But if it doesn't happen, what's going to happen to that EA moving forward with its results? It's not going to make profit. Yeah. So it's great. I mean, nothing wrong with it. It's running on a real account. Brilliant. Started with 1,000 over a period of 216 weeks, which is a long time. This has been running. It's making nice, steady growths. But these outlier months, years rather, are not the norm. You're normally going to return somewhere around about 25% of your account. Okay. So looking at it, if you had $100,000 account of your own money that you could trade with, because obviously this can't run on prop because it's done 28% of drawdown. There's no way this is running on prop. It's got to run on your money. If you wanted to make 25 grand a year, you've got to put 100K in. Who's got 100K lying around? They all look brilliant. But what happens is people go, okay, that's great. I can see that equity curve. To make money out of this properly, I'm going to have to over leverage it. So what I'm going to do is I'm going to 4 times or 3 times the lot size that I should be using so that it can actually return me something I can spend a month. And then all of a sudden, when you get the drawdown on it, it blows your account. It doesn't work. That's why everybody moans about them. No reviews either. It's weird. Don't know why there's no reviews on that one. But yeah, anyway. But this guy's charging 6 grand for it. But when you dig into it, where's the... That's the EA's in here, isn't it? But when you actually dig into the results and analyze the results and get those results out, you see how it works. And a lot of them as well, when you look at the trading history and open them up, this is good. This one looks like a decent one. Doesn't use a stop loss, doesn't use a take profit. So it's a position trading EA. I have no problem with that because that's how you make money, as proven there. but you've got to watch the outliers. But a lot of them, you'll see, they're all using martingale as well. So a lot of these are martingale and grid-based EAs, and grid strategies. If you get a grid strategy or grid EA, as soon as you get an ADR hit on a grid EA, you're in massive problems immediately. And normally the grid trading EAs are full-on martingale, doubling up. So again, like the gold one, you get the odd EA that shines for a little bit because it's using martingale, and I could make a massive amount of money in a short period of time with martingale, but you will blow the account. And a lot of them are doing that as well. So you just got to be very careful. We've had this conversation in here before about EAs, but yeah, $5,000. Gold live account they've got as well running for it. Hasn't been running that long, 25 weeks. Yeah, so why has it only been running 25 weeks? Just got, I'm so skeptical. So this started in June. So the EA was released in June this year. So it's only been out a month. Again, no stop loss, position trading. Taken 40% drawdown on the account. Again, nothing particularly wrong with that. I'd say it's probably over leveraged, but just trading gold. Again, no stops, no TPs. But if you stick them on your account, but at some point you'll probably find it will go pop. But at least he's running it on real accounts, which is good. So might have a look at. I missed that one yesterday, the gold one. I was looking for a gold EA. That's just why sent me down this path yesterday. You get lost. I got lost yesterday in this lot. I went down this path trying to find a decent strategy that I could figure out that these EAs were using, so that I could build my own EA to backtest them, basically. But couldn't find one. This one missed me by because I'd already looked at that and I didn't realize he had a gold signal. I only looked at his original signal on that, so might have a look at that later. Anyway, we digress again. That's your fault, Brian. Morning, Mimpo. Morning, Neo. Morning, XR Update News. Morning, Bradley. Let's just have a quick look at what's going on with the DAX. We are absolutely stuck on the DAX. So there's your open. We're back where we started. So not going anywhere. Still fancy this as long. Today. We will see. Right, let's carry on with the pounds. So, pounds. Morning, Kennelly. Brian, sticker shock. What's that mean? Sticker shock. Not heard that one. Heard of a sticker rock. Pound odd. So I've got a sell on this at the moment. Only because of the RSI extension back here. We've literally gone nowhere on it. So, morning, Grateful Buster. Morning, Giamond. It means the piece of the EA. It means the price of the EA is too high. Oh, right. I see what you mean. Yeah. A lot of these people. The reason these EAs are priced as they're priced is to stop you buying the EA and to make you buy the signal. Yeah. Because people, I don't do rent. I do rentals on my EAs because people ask for them every now and again. But no one rents EAs. My EA doesn't sell very much anyway. But maybe one a month, 2 a month, if that, rentals, and they never re-rent. Reason being is people don't like to rent stuff and have consistent outgoing money, which is understandable. So the reason they do it with these EAs, they put these huge prices on, is first of all to make you think, oh my God, this is the holy grail. Look how much it costs. It must be amazing. You have to buy the signal. The signal makes them like 30 quid a month, every month, ongoing, as long as the people are in there. So the idea is they want to push you into their signal service rather than push you into buying the EA. This one, for some reason, has got no active subscribers either. Weird. I found something else out the other day as well. Just to let you know, might be of interest, might not. There was a signal run on MQL5 by a guy that basically ran a massive marketing campaign, ran this EA. It looked absolutely fantastic. Loads and loads of people subscribed to it. And it was showing in here with like hundreds of subscribers. And of these hundreds of subscribers, the vast majority of them were cent accounts that had been set up on brokers like Forex, all subscribing to his own signal to make his signal look busy and look usable. So the whole marketing campaign was run around, look at this amazing EA, it's trading, and I've got X hundred signal subscribers. And they were all subscribing with cent accounts to artificially increase the amount of money that was trading on it and the amount of people. So again, there are so many scams in this industry that you just have to pick the whole thing to pieces and think, as soon as you see anything, just think, I don't believe it. And unless you can prove yourself 100% right at some point, assume it's not true. And then you look at it and go, hang on, this has been going for 216 weeks, done 700% return. Why is nobody subscribing to it? There's something wrong, isn't there? There's no reviews. Just be careful. Be careful out there, children. It's a dangerous world. DAX is stuck still. Anyway, we'll carry on. Pound odd. So pound odd is sideways as well. Australian dollar should not really be strengthening. The pound should be strengthening. We got another 1.25 coming on our interest rates, at least 1%. So we should see some continued long-term strength on the pound, except we're not really very far. As Jamie just said, the best EA available is your brain. Signal services and off-the-shelf EAs are just not the way forward. My EAs, as I say, all my EAs are brilliant. I love them. I use them every day, as you know. But I am here watching everything every day, and they're used to get me into positions. The reason I'm short on the pound odd at the moment is because it took one for me, so I didn't have to sit here, wait for the RSI to signal, then for me to watch and monitor the M5 reverse alert, wait for it to happen. The EA did it all for me, but I am managing this trade. I am in the pound odd. The EA is scaling in for me and managing the whole thing, but I'm trading it. Those are the EAs you want to use. The ones where your brain is programmed to the EA to do what you want your brain to do while you're asleep. So pound odd, sideways, nothing at the moment. I'm short on it at the minute. It's probably not the best trade to be in. ECB, consumers see inflation at 2.5% in 3 years. 3 years. So we're sitting at 5.5 at the moment. So they're seeing 2.5% in 3 years. That's a long road. Long road. We just had the German PMIs coming out as expected. No news there, really. So yeah, this is the reason I like this as a short still is because we got these whacking great propulsion gap targets to the downside. So I think at some point we are probably just going to eke ourselves down here. The pound is weak at the minute. Not everything's weak at the minute, but I've got my TP, as you can see, set in this propulsion gap, the closest one. If it does rally back up and test the highs up there, I'll get into a second position there, and then I'll target whatever is closest, really. I don't foresee any reason why we should get any squeezes on this. So pound CAD, again, you can see it's just all at the moment sideways. There's no massive advantage to the pound or the Canadian dollar in either direction. So pick whatever you want, get in the extensions whenever you see them. So trades on this, as you can see, in any direction at the minute. We had a long trade there. We had a short trade there. just waiting again, waiting for something to get extended. Pound Swiss sideways again, pound more bullish, euro and Swiss bullish, no advantage, sideways movement. Last entry was on that extension, 3 entries and exit. So just waiting for something to kick in. Pound yen we've looked at. Yeah. $2.5% loss. Aggressive drawdown control. You have to use a stop with aggressive drawdown control, and unfortunately that's what happens. So stopped out because I used stops. Good. Never mind. You can do about it. Pound New Zealand sideways. So just waiting on this one for some kind of direction. We've had a big strong push on the New Zealand dollar off the back of the Australian rates yesterday, but this should be bullish overall. Long term fundamentals are bullish. Obviously, we know the New Zealand dollar has the potential, obviously, to come all the way back down to this propulsion gap as well, but it's not going to be a pretty journey. It's not just going to suddenly flood all the way back down to there. So if it is going to get down there, it's going to be that kind of path over a period of time. But again, everything at the moment is all rotating around economy and interest rates, and nothing has an advantage. Again, buy a scorecard. There's nothing with a massive advantage at the minute. There's nothing anywhere near the 10s, the 15s, 10s or 14s, which is the max. It's all like 5s and 6s, mainly because retail sentiment is off and gives it that little bit more advantage. But long term, no reason for any massive longs or shorts. Pound US, at the moment, we're kind of flagging. The US is just weakening every instance we get. So I've been much more interested in longing it than shorting it. Last long was there. Straight in, straight out. Last short, there's a few shorts on this actually. Had a short there. We had a little long down there. We had a short there, which I exited because we had news coming for the US. Glad I did. Took the second entry. Again, got scared. Got out. But those would have worked, those trades. Little long there. And yeah, just waiting for some kind of extension on that one as well. Targets to the downside at the moment. I get the feeling on this one we're going to get one of those pairs where you get orphans. A little bit like the Aussie New Zealand when it had its rally. You're going to get orphan propulsion gaps as it pushes. It will come back down and sort them out at some point, but I don't foresee any reason why this shouldn't be a long. So I'd be looking for, double bottom bounces, any RSI extensions to the downside, ADR hits to the downside. But equally, you can take it short as well. I just think that you'll probably find you'll be in more positions trying to get out of shorts than you will with longs. I think they'll probably rally faster and harder to the upside. New Zealand's at the moment, as if you look through all of them, yeah, they're all pretty sideways. Slightly more bullish New Zealand dollar than bearish at the minute, but again, there's no real advantage either way. So you can take any direction you want on it. If you get a big strong push, wait for the profit take and exit on the profit take. Big strong push, looks like a pretty good short. Didn't get an entry on that one though. New Zealand dollar Swiss, same thing. Just got short on that. We are about to take a second position on that, I would imagine, this morning. 49. Oh no, nowhere near. So yeah, not going to get a second on that this morning, but coming up into resistance. So watch that level there, which is a 2-week high, and then last month's high, which will be 100 to 125 ADR, somewhere around. If we get a reversal up there, I'll be taking a second position on that one for a short. We have tested that once. This will be the second test. So if we're going to stay range bound, that's exactly where I would expect the sellers to step back in if they are wanting to be short. New Zealand dollar yen, we know about, same thing. That's the first one that's actually attempted the rally, it's getting slammed. So big moves on the yen today, starting anyway. So watch all these lows. Yeah, if we get these lows broken, again, they're buying up the previous day's low at the moment. Swiss yen. So just watch these yens. Do not get out too fast. If you see us down at 100, 125 ADR today, hold. There's a good chance we are going to start a big correction on these yens. New Zealand dollar CAD, US dollar. Just taking a short on this one as well. FOMC this evening will probably rally it one way or the other. Target on this. I mean, that's the obvious spot really for me, this big propulsion gap. So we had a 2-day accumulation, which broke. That's where they started to move. We haven't tested that yet. Obviously, you've got a much tighter target. If you want to get out within ADR, it's there. This is a double top bounce there. There's your end pattern reversal. So lower time frame. M5, your reversal alert was yesterday there. That was your reversal alert yesterday. This morning you will have had one in there as well. Actually, no, it's sideways. You may not have got one, but might have been one there. But multi-day M, need to break that low. If we break that low, we'll be flushing back down at least to this area here. And that area there is that propulsion gap on the hourly time frame. US dollars. Yes, is as good as mine with the US at the minute. Impossible to really judge anything with the US. I just want to buy it. You always want to subconsciously buy the US. It's the world's currency. It's the strongest currency. At the moment, though, they're stuck and they are in all sorts of trouble with all sorts of things. And the market is just not happy with it. Every single piece of negative news is negative. So the drops are much faster and much harder than any of the rallies we get off of positive news. It's so hard to make a positive movement on the US at the minute. So you've got to be safer with shorts. I'm in longs at the moment from here. Yeah. Made, there's decent buys, made money out of, but long term, I'm looking for a return back up to there. But, if we get positive OPEC news today, if OPEC decides to reduce output today, we're going to get a rally on the Canadian dollar. That's coming down. If FOMC come out this evening and are really dovish and go, actually, it doesn't look good, blah, 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 the US is coming down. So it's all fully news driven, and all you're going to get is these big spikes off the news, sit around, wait for the next news event. That's what's happening at the minute. We're just revolving around news. And obviously we've got major news potentially with FOMC. We've got unemployment tomorrow, and then we've got the unemployment rates on Friday. So it's a big week for the Canadian dollar with the unemployment rates and the US dollar. So there's a lot of movement potentially coming in this one today. God, this DAX is evil today. So yeah, this has got potential to go either way. At the moment, got longs on it. If you look at the 4-hour as well, that was your last 4-hour entry, basically the same as the hourly entry. Those are your last two, except this time we didn't get the bounce. So we've got nice divergence here, bullish divergence. So just looking for them to make some moves. My target's on this up here because that's where the average is at the moment. Obviously, we've got multiple areas of support here, which potentially are going to act as resistance levels. So as we're pushing up here, we've got to push through that level, that level, that level, that level, that level. So if we want to get up here, we've got a lot of levels where are potentially going to act as new resistance to drive the market back down again. Got the 24 bounce happening potentially at the moment as well. So it's going to take some pretty decent fundamentals, I think, to rally this US dollar. So I will be out up here. All these drawdown controls that have been done have been paid for with the aggressive positions. So if it gets back to break even, it's a profitable trade overall for me at the moment. So That's the US dollar CAD. US dollar CAD. US dollar Swiss sideways, totally sideways. 1, 2, 3, 4. Well, 2 weeks you can see. Yeah, these black lines. So there's your 2 week high and low. There's last week's high and low. We've been sideways for 2 weeks. So sell the highs, buy the lows. Last trade on this was all the way back here, which was a buy. Straight in, straight out on a news event. Again, all news. It's the only thing that's moving the market. US dollar yen coming down. Again, not expecting to break yesterday's low or the previous day's low. If we do, fantastic, we're off. If we don't, we're just in this holding pattern waiting for the Japanese to do something. So we'll have to wait and see. And gold obviously has rallied up because the US has been weak. But it's coming down. Gold, again, you know, you can't pick a direction on gold because it's all going to be based on what the US dollar does, and nobody knows at the moment. So, oh, look at the DAX. So that was half an ADR, 780 pips or 78 points. ADR is 147, half an ADR is 73. We did 78. So basically they did half an ADR of movement. So we're just contracting into a symmetrical triangle at the minute, waiting for something. But there's no news today, so I don't know what we're waiting for. There you go. There's everything. All done. David banked 3% on a scalp on gold buys. Good job. I'd probably sit there today and take that. There's nothing moving. The RSIs on the 4 hour, we didn't really look at these, but I was looking at the hourly charts. But Euro New Zealand 4 hour, we know obviously this is a buy on the hourly. So this is a 72 bounce potentially as well. So again, somebody asked me actually, which is a good point, might as well cover it because this is a really good example. Why I use the 24 and the 72 daily moving averages. So obviously on the 4 hour chart, these are plotted. So this is the 24-72 moving averages on the daily. Yeah. The 24 is your monthly. The 72 is your quarterly moving averages, which are the reporting periods the banks and institutions use. The reason I use those is from a higher time frame. And I don't think I explained this in the bootcamp, but from a higher time frame perspective. So this is the 24 and the 72 plotted on the 4 hour chart. On a higher time frame, if you are in a bull run, i.e. in an uptrend, what you tend to find is the market moves in market structure, as we know. So it pushes up, makes a high, pulls back, makes a higher low, pushes up, makes a higher high, pulls back, makes a higher low, pushes up, higher high, higher low, until you get a lower high and a lower low, which is a market structure break. Yeah, which is what the reversal alert indicator signals you to. So the reason these moving averages are used is if you look at what they do, when you're in market structure, making a low, a high, a higher low, the higher low will typically be somewhere around the 24.72, a higher high. A higher low, in this case, will be at the 72. Yeah, you can use obviously Fibonacci for this as well. You can use Fibonacci retracements. That's the same thing. A fib is basically plotting market structure for you. If you get a 61.8, 72 pullback or whatever, that's going to roughly be a higher low than the previous move, isn't it? So that's one of the reasons why the price bounces a lot at the 24 moving average or the 72 moving average. It's not bouncing off the moving average. It's making market structure. Yeah. And I explained this in Telegram to somebody because these aren't magic in any way, shape or form. And the market is not bouncing off of these moving averages. It's making market structure. And by the definition of market structure, you have to have a higher low. If you have a moving average, it looks like a moving average bounce. It's not. It's just market structure, meaning that the buyers who started this move have added to the move because they want to continue higher. Therefore, you get a pullback and the buyers add. And this is the whole, again, this is why everything that I have on my charts is there, because it shows you where the banks started the move. So if we are going to put in a higher low here, that propulsion gap is your last chance for a higher low. If it breaks that propulsion gap, it's a double bottom. Now you're range bound. Yeah, the trend is ending. So it's all interlinked. The propulsion gaps are showing you where the orders were placed in. So when you're pulling back, if you're going to make, for example, a higher low, you have to use an area where the buyers were buying to add more buys. That's the only way you're going to get a higher low. Because if the buyers don't buy there, the sellers are going to continue, and you're not going to get a higher low. Your market structure is going to break. Yeah. So it's all intertwined, everything. But I just thought I'd explain that because just while I was looking at the Euro New Zealand, because it's a prime example. When I talk about 24 and 72 bounces, I'm just saying if we're going to continue market structure, this is where we're going to bounce from. Somewhere around here. I don't know where. Obviously, nobody does. But if that's going to happen, which is the 50-50 shot, is that going to happen? We don't know. If that is going to happen, somewhere around there is where we're going to go from, which is why you can't be exact. If you use a stop loss when you're trying to do this, you can't be exact because you've got no clue. You're not in control of the banks. The banks are. So if you think this is where we should go from because we've got a propulsion gap and it's a 61.8 retracement on the fib and it's bouncing off the 72 or the 24 moving average, and the banks go, yeah, but we want to go a little bit shorter because we've got commercial orders we need to execute short on Euro New Zealand, you get stopped out. You're probably right. But you won't get the trade because you'll be stopped out. Same way as today. I still think the yen is going to power up and come down. Did I get my stops wrong? Yeah. Why? Because I used a stop. Of course you're going to get it wrong. Because if you place an order in the market to make you lose money, you're going to lose money. Nothing you can do about it. Yeah. And this thing quite possibly is going to do that for today, at least, because we've got FOMC later. So, but there you go. DAX is starting to rally. So if we get that today, I will get out there. Tom, I've been trying to use the market reversal alerts EA on a demo, and every time it tries to take a trade, it doesn't work. And in the journal, it says, not enough rights. That's one for Google, Tom. I've never heard that before. That's a problem with your computer, I would say. Not enough rights. MetaTrader server error occurs when a trading server loses connection. Usually the error will appear if you log into the server using an investor password. You're not logged in with your MT4 user account. You're logged in with your investor password. JPY is looking like it's going to start a move. Yep, hope so. Surge, JPY seems to be moving. Yeah, everybody's waiting for JPY. Understandable. It is rejecting though. Yesterday's low. Previous day's low. Rejection. At the moment. Yeah. That's what happens in a range. This is why ranges happen. Yeah. When you're in a range forms because limit orders trigger at highs and lows. Yeah. So previous day's high will have a load of limit orders sitting there waiting to trigger. Previous day's low will have a load of limit orders there waiting to trigger, as will the previous day's highs and lows and yesterday's highs and lows. Yeah. So these limit orders have triggered. Buyers are stepping in, pushing back. That doesn't mean that's going to be what's going to happen. So there's more limit orders than there are sell orders, but that's understandable because the sellers have been selling for 3 hours. They're going to run out of sell orders. So that's why you get retracements. Then the sellers will re-add on that break and push back down if it is a move. Moves only start when there's reason to start a move. If there's no reason at the moment for them to want to short, i.e. want to buy the yen, they won't. We'll just end up carrying on in that range. It's difficult to get out of ranges sometimes because because when you get such obvious ranges forming, like we've got on so many things, they become self-fulfilling prophecies because everybody sees them. Therefore, everybody sells the highs and buys the lows. So it just becomes very, very difficult for any institution to make a move because there's so many other institutions buying in the highs and buying the lows and selling the highs. So this is why why you get stuck. The thing that worries me about the yen is if you look at the legs on it, it's potentially a third leg. But that would make it quite difficult to hold it. But if it does do a third leg, especially on the US dollar yen, the Japanese will be unhappy and they could step in at any moment. It's just when. When are they going to step in? For aggressive drawdown, could you not take multiple trades that add to the same lot size as one trade and set some of them with a stop loss and see how they work instead of being taken out with a big loss? Yeah, you could do. Up to you. Yeah, I mean, all you're doing, though, if you think about it, is you're tightening the distance, really, between your entries. You're kind of building another little micro position within a position. So the position here is there, there, and there. If you were to do aggressive drawdown control up here and do maybe a few different trades, you're just building a position. Position 4 is made up of 3 parts or something like that. So yeah, you could do that. Personally, I prefer to get in big. The whole purpose of aggressive drawdown control is to bring this average price within ADR or as close to a target. Yeah. So you're always thinking if something's going wrong, if something's going against you, yeah, and you see where my euro yen is. I had an out on euro yen there today. I had an out on it last week as well. But the aggressive drawdown control position is here. Look, that's the aggressive one. And I've been in this aggressive now for 1, 2, 3, 4, 5, 6 days. Hasn't given me a reason to get out. So it's there to bring this average within reach so that I can get out and be done with it, right? Or it's there to get me escapable before a propulsion gap. So that area there is going to act as a support, 100%. When we get back to that area, it's going to act as a support. That's where my main first TP is. Because it did last time, it's a propulsion gap where they added to the trade. Yeah. So they pushed, news, profit take, add. They will add again there. Because the market is still wanting to long this. If they don't, we're going to slam straight through it and come back down into these areas down here. So you can see where the TPs are positioned. So the TPs always are positioned at logical areas. Propulsion gap before support resistance areas, because we only ever bounce out propulsion gaps and offer support resistance. So that's what you've got to do. You've just got to look into the future and go, right, worst case scenario, all we do is we get to that propulsion gap and bounce. Highly unlikely because it's tiny. And that is also a weekly low, but it's kind of in a range. So it doesn't really count very much. But best case scenario is there. Awesome case scenario is coming all the way back down here. Yeah. So I've got TPs down here. I've got TPs in here and I've got TP here. They're all within profit, but they're only within profit because of that aggressive drawdown control position. If I'd broken that up into 4 parts, entered one there, and then I was going to add to it as it came down, for example, or maybe if it pushed up there, I'd add another one. I would just be sitting in 1/4 of that, wouldn't I? Maybe 2/4 of it, rather than what I've got. So my average wouldn't be there. It would be down here somewhere. But I've got the option to get out. So let's say, don't forget you're trading multiple pairs. So if you're in different yen pairs at the moment, you're in the euro yen and the US yen. And let's say, for example, you're in the New Zealand yen. New Zealand yen is doing something completely different to the euro yen. So these are all going to move independently because you've got different currencies acting. If the euro collapses today, this will be down here. If the New Zealand dollar doesn't collapse, the US dollar doesn't collapse, and the pound doesn't collapse, those will be doing that still. So you give yourself an out on each of them. But the reason these TPs are down here, because if we're going to get intervention from the Japanese, we're going to get a 300 to 500 ADR move, aren't we? We know that's what happens on interventions. So we're looking at somewhere between 350 to 500 pips. That's 530. That's the only reason that is there. Because if these guys intervene at any point, we're going to go 1 hour, 2 hours. Yeah, I'm taking that. That's 10, 15% profit. That's a month's worth of profit in one hit because of that. So this is a very abnormal aggressive drawdown control situation, because we're not just waiting for a profit take. We're potentially waiting for an intervention. I don't think necessarily it's going to come now. I think the market has got the message and they are now going to start buying the yen up, but gradually. It's not going to be a big rally, I don't think. It'll probably be a fairly good ADR day. We might get a 125, 150 ADR for a couple of days on the trot, in which case we're going to be down here somewhere. But we will probably find some support there. So I can kind of foresee this maybe going into that sort of movement. Yeah. And using these levels as support and not getting down there. But I don't know. Nobody knows, do they? If we knew that, we would be sitting here going, well, today, this month, I'm going to make because it's coming here. If we knew where it was going, we'd all be billionaires, wouldn't we? But if you want to do aggressive in a slightly less aggressive way, try it. I've never tried it, but use a different sizing methodology and give it a go. Obviously, you're going to take smaller losses, but also you're not going to get your average where you want it to faster. It's a speed thing for me. I'm wrong. The idea behind aggressive drawdown control is, holy crap, this got extended way beyond normal levels and embedded. And then on the pullback, all we got was a half ADR accumulation before we got another extension and another extension. Yeah. Look at the divergence on this. Yeah. This is massively overdue, a pullback, a profit take move. They haven't taken profit on any of this. You could argue there's possibly a profit take in there. PMIs for the UK have just come out as expected. And that's the point of aggressive. I'm trying to catch the top with an order that means I can just go, phew, that was horrible, and walk away. That's the purpose of it. It's not to make an absolute fortune. However, in this case, with the yen, there is an opportunity to make a fortune if they intervene. It's a slightly different scenario. And the other thing you've got to think is as well, Aussie New Zealand, for example, this was a hideous squeeze. It was just, relentless. And it was just, it looked like constantly we were getting to a point where this has got to be the top, which is why I always try and pick support resistance levels. Look at the aggressive drawdown control position there. Because of this. Yeah. So you're always trying to pick an area that makes logical sense. We had a propulsion gap. So if we were going to look at the market structure at the time. High, lower, low. I was looking for a lower high to come back and test this so that we were going to stay in a slight down channel, because there was absolutely no reason why the New Zealand should weaken that much off of an as expected rate increase. Yeah. But that aggressive drawdown control position would have brought my average from somewhere like that to somewhere like that, giving me a potential double bottom out if it was going to continue, which it didn't in this case. So that's the whole point of aggressive. If you get in with a small position, you're not going to get your average within reach. But yes, you will take losses. And last month was a loss because of mainly Aussie New Zealand. But this whole thing, as I said, that was my total loss on the Aussie New Zealand over that trade. Yeah, so that trade lasted from the 23rd of May to 20th of June. So 4 weeks, basically, I was in that hideous squeeze and I came out with a -1% loss on the entire thing. That's the whole purpose of position trading. We're getting in with positions that do not make you lose fortune if you're totally wrong on them. Yeah, that is a result. Oh my God, I was wrong for 4 weeks on the trot on every single trade, apart from the last few, and I made a 1% loss. Who cares? That's why you need aggressive drawdown control, though. And sometimes, like last month, you need it a hell of a lot more than normal. This is not normal trading. This is just not normal. This market at the minute is very, very different to what we've experienced over the last couple of years. But then again, we haven't had an interest rate rise as fast as this, or inflation rising as fast as this, with a war that's caused oil prices to go absolutely crazy, for house energy prices to go crazy, for food prices to go crazy. Yeah, Ukraine war has been very unique in the fact that it's restricted our grain worldwide. We can't make stuff, therefore stuff becomes more expensive to make. Food's gone up 15% year on year. All of our energy bills have gone up 400% plus, and the rest, you know. And it's all happened because of Ukraine. At a time we're recovering from a pandemic, in a period where the stock markets were rallying, even though companies were making losses. You know, this is totally abnormal conditions. We have never experienced this economic situation before. Inflation going up at the rate it's been going up, with interest rates going up at the rate they're going up. You know, so you can't trade any condition at the moment with any system or strategy. And again, bringing us back to what we were talking about earlier with the EAs. There is no EA being tested over this market condition before. So how would you expect any EA to survive anything? It's not going to, is it? You've got to adapt. That's what we do as traders. We look at what happens in the market and we adapt to what it's doing. Which is why any backtest is never going to be conducive to what's going on in the market when you're actually going to start using a strategy. So we are still contracting on this DAX at the minute. We are obviously making higher lows and lower highs, which is a symmetrical triangle pattern, which is a contraction before a move. So let's just hope it's a long one today. Steve, can you show the results of the different MREA strategies for the last month? I did that on Friday, Steve. They're all losses, I mean, massive losses, because they're all trading every single instrument. They're over leveraged. So, yeah, I don't know. 150% loss, I guess. I don't know. Lots. But then again, you're not doing that, are you? You don't trade every pair. You don't trade every exposure. Same as this account. Look. This is trading every single instrument. It's massively overexposed. So you are going to get the trouble. The reason I set those accounts up was to show every trade. The idea being is so that we could look at every instance of every instrument that anybody would be in at any time. What I didn't factor into it, which is totally obvious now we've gone through a couple of squeezes, is that the losses would be exponentially increased, because when you're doing drawdown control on something that is squeezing, that's fine. We don't mind. I've done some drawdown control this morning. Oh, these are aggressive, but normal drawdown control is fine. But when you're doing normal drawdown control on 6 pairs at once, you are taking 6 times the loss the strategy would normally take. So it's not a valid representation of the strategies, is it? Because all we're doing is we're seeing double the losses. Because with position trading, our upside is capped to a target which is normally half to 1 ADR. Our downside with drawdown control is uncapped on a squeeze. So what you've got is a situation where you're over leveraged on uncapped drawdown control, which is loss, and you are capped on all upside movement. So it can, if you think about it, the whole reason the strategy works is because we limit exposure. so that if there is a squeeze, we can survive the squeeze and use the profit made on the other positions to make our weekly and daily gains. When you're taking 6 times the loss, you can't ever recover that. So you'd have to basically take the TP out of the equation, cross your fingers and hope for a reversal, not just a pullback. In reality, you know, there's a 50% chance, isn't there? So there's a 50% chance that 50% of the trades aren't going to work. So, which is why I teach the bootcamp the way I teach the bootcamp. So it's a bit of a bad experiment, really. And the people aren't asking anyway. So, you know, the whole point was I could show, you know, if you're in the euro yen with the H1M5 mean reversion, this is the situation you're in at the moment. That's the whole idea of it. What people are just seeing is loss, which isn't the case. Because if you're in the euro yen, you're not in the Swiss yen, the pound yen, the New Zealand yen, the US yen, and the Aussie yen, are you? You're in euro yen and maybe one other. So this is your situation with this one. Like the Aussie New Zealand. Overall, on the Australian dollar, if you look at all the Australian dollars and not all the Australian dollars, all the New Zealand dollars, Aussie New Zealand made a negative 1%. New Zealand dollar CAD, that was, I don't know what that was profit-wise. New Zealand dollar Swiss, there was a trade there. New Zealand dollar yen, that wasn't one. New Zealand dollar US, there was a trade there. But you would not have been in all of these trades on the New Zealand dollar. So you would not have been in the New Zealand dollar US dollar, the New Zealand dollar Swiss, and the New Zealand dollar CAD, and the Aussie New Zealand. You couldn't be in all 4 of those. If you were following exposure rules, you could only be in 2 trades. If you didn't take the Aussie New Zealand, because at the time you were in the New Zealand dollar CAD and New Zealand dollar Swiss, you didn't experience that Aussie New Zealand. What I was finding in the live rooms, which is why I did what I did with all the EAs using all the strategies, was people were contacting me saying, I'm in Aussie New Zealand, squeeze. How do I get out of it? I don't know, I'm not in it. Where are you? What's your trades? What's your positions? Well, I got in here, and I got in here, and here, and here, and here, and here. Well, you shouldn't be, should you? Because you're obviously too close together with your entries. That's going to kill you. You're going to get more exposure, more drawdown, faster, and it's going to hurt twice as much. So the idea was to run the EA so that I could see what you were in. You should be spacing 3/4 of an ADR to an ADR apart. So you should not be in more than 4 positions. If you are, this is what you should have done as a learning tool. But it doesn't work out that way because that's not what people are asking questions. So there's no point in doing it. I might as well just show the trades that I'm in, which is what I'm going to do now. Do you think if it wasn't overexposed, it would be green? No. I made a 4.5%, 4.2% loss last month. I did. This is the thing, Steve. If you're running the market reverse alerts EA, you're not running it with the same settings everybody else is. You're not getting the same trades everybody else is. You're not doing drawdown control the same as everybody else. You're not doing aggressive drawdown control the same as everybody else. There is no, I don't know how many we've got in here, 76. If all 76 people in this room right now, including me, are running the market reverse alerts EA, none of you have got the same P&L. Not one. Because your broker data is different. You will have started your EAs at different times. You will have exposure on different positions. You will have done aggressive drawdown control where others haven't. So your P&L is never going to look the same as somebody who's sitting next to you, which is why I teach in the bootcamp. There is no, when this happens, do that, because you will be in a different situation. And when I'm in 4% of drawdown, I'm sitting there going, I'm in 4% of drawdown. Other people are panicking in 1.5% of drawdown because they're not used to it, going, oh my God, I've got to get aggressive. Yeah. So I can't show everything. I can set the EA up to take trades, and that's what I did with every single trade. But that doesn't give a representation of an account, does it? This is sitting in 13.44% drawdown. Why? Because it's exposed 6 times on the yen. But this will also, when that yen comes down 300 ADR, this will bank 25% profit. None of you are going to bank 25% profit. This will, because it's trading differently to everybody else. Even if everybody's using exactly the same set file, you're not going to get the same. entries because your spreads will be different. So let's take Euro, Aussie, New Zealand as an example, just to demonstrate the fact. Some of these trades, I'm just going to find one. I bet there isn't one. There must be one. There. Yeah. Right. This loss there. Okay. That loss was taken on my account because my broker from that close opened there and spread that far. So my broker decided to spread the market 62 pips. ADR is 72. So my broker decided in his wisdom, I know what we'll do. We'll do an entire average daily range movement at the swap of the spread and stop that guy out. Your broker, IC Markets, opened there, spread to there, and carried on trading. You didn't take that loss. Your EA is now in a totally different position because it's not going to now use that for its measurement of the next entry. It's going to use that, and it will get you in straight away there. Whereas my EA is going to get me in here. Your EA won't get you in again until there. So even if people are trading the same instrument, your broker will not get the same entries. Spread, slippage, time of day, what you do with it is going to be totally different. So, and this is again why I've never put signal. I did put a signal up. I put one signal up for one strategy, but I've never put tons of signals up on the signal. And we were talking about this with EAs. I don't run signals because there's about 1 billion different combinations of settings in the market reversal alerts EA. It's designed to be a Swiss Army knife so that as a position trader, you can use it exactly how you want to use it. There is no right or wrong. That's the reason we position trade, because if you use a stop loss of this and I use a stop loss of that, we're both wrong or we're both right, or one of us is wrong and one of us is right. There is no right or wrong in trading. You get in and you deal with what happens when the market moves after you've entered your position, because you can't control the future. So if I put up an EA with a specific set of settings and that's wrong for that month, so what if it's wrong for that month? But it's going to be right for the next 6 months. Yeah, because we're not going to get any squeezes. This month, if that yen comes down this month, I think this made, what did this make last month? I think this ended up minus 9%, which if you think about it, considering it's been completely over leveraged on multiple squeezes, it only lost 9%. Bloody good. Most traders will have blown their account last month because nothing went anywhere in the way that anybody was expecting, but it made about a 9%. If this month the yen collapses, it's going to make 25+% profit. This tomorrow, after FOMC, could be sitting at plus 15% very easily. Yeah, but that is also not a good representation of the market reversal alert CA running on full auto, because it's overexposed on its profit as well as being overexposed on its losses. However, the profit is capped. The losses are not in position trading. If something squeezes, we take losses until the profit take. The profit take, we always get out too soon. It's just the way it works. So that's what exposure does. Exposure reduces the losses. Overexposure, it exponentially increases the losses. And that's why there's no point in doing the experiment. What I've done with this, what I've decided to do with this account is I've reduced the risk on this account down to 0.1% instead of 0.25. So I've reduced it by 0.15 lots or risk percent. And I'm going to let it carry on trading everything just so that, you know, I can say this is overexposed, but it's reduced risk. So hopefully what you'll see is the results should be fairly similar to a normal position trading account, because we're trading a third of the lot size, but we should get into more trades. Yeah. I'm overexposed on the CAD. I'm overexposed on the New Zealand. I'm overexposed on the yen. But that CAD exposure is not quite a third, but roughly a third of normal exposure. So being overexposed on it with a lot less risk means I'm actually not going to get into huge drawdown on some of these, which is what's happened. So, but that's basically, yeah. You know, it's very difficult to run a strategy like this when you're using an EA that isn't fully automated. It is fully automated, but it's only fully automated in the way that you want to do it, and everybody's different. This is the trouble. I'm not teaching something that is black and white. I'm teaching how the market moves and how to trade the market. How you do it is entirely up to you, and everybody's going to get totally different results. But look at these. I mean, these yens, where we are on the CAD yen now. Yeah. This morning that was in 6-7%. I don't know. Look at this. 2 hours later, I'm almost break even on it. 7% drawdown to 0% drawdown in a day. Quite possible today, but only because it's massively overexposed, which has meant I've had to do massive drawdown control. The drawdown, the actual lot sizing on this is 7 lots short. So I've done aggressive drawdown control with a 7 lot short, which is normal aggressive drawdown control for me. I'm using all of the lot size to do aggressive, which is why I take bigger losses. Other people, as I teach in the bootcamp, will take 50% of the lot size and use aggressive drawdown control slightly more conservatively to get out of their positions, in which case their average won't be where mine is here. Their average will be down there. Still, that's achievable, 150 ADR in it today. And if this yen move is starting, we'll be down there tomorrow, especially if FOMC comes out as negative for the US. We'll get probably a rally in the yen. So hopefully that explains it. You know, it's just I'm trying to please everybody and I can't, because there is no one shoe fits all type way of position trading. You know, some people are trading H4. I'm pretty much exclusively trading H1M5 now. For the last 2 years, I've been pretty much exclusively trading H4M15. I've switched to H1 because I've identified actually it's better at the minute. So I'm sticking there at the moment. I might switch back to H4. But again, I've got people contacting me in Telegram saying, I'm in massive drawdown. I'm using H4M15. Yeah, it's been a lot worse, H4M15, than H1M5. So I thought, well, let's show all of those trades. But then everybody's trading H1M5, H4M15, and ADR reversals. You can't. They're all the same thing. They're mean reversion strategies. Pick one, don't pick all. So there's been a lot of confusion caused by what I've set up on the server with all good intentions. And I've decided not to bother doing that anymore because it's too complicated. Not too complicated. It's just not the right thing to do, I think, in a kind of a learning environment where you're trying to teach how this thing moves, basically. There's a million ways to skin a cat. You only do it once, though, using one method. Yeah, I teach 4 methods. I don't trade all 4 methods. If there's a H1 yesterday on the Euro Swiss, there was an ADR reversal. No, it wasn't. It was Euro New Zealand. There was an ADR reversal. Yeah, I'm long here, not on an ADR reversal. I'm long on an H1M5. But if you're trading ADR, you're long as well on the ADR reversal. They're both the same entry. What people have been doing is trading all the strategies, and immediately you're over leveraged. You're taking twice the number of trades at that level than you should be because you're trading 2 strategies. And that's because I had 4 strategies running on the VPS. So everyone started trading 4 strategies. It's monkey see, monkey do, and I totally get it. But that's not what I teach. So people have been skipping the bootcamp and driving straight into what's been happening on the VPSs. That's not the thing to do. So that's why I've kind of kicked them to touch a little bit. I'm still trading with the EA, obviously, but on one account. Not all of them. -9% is brilliant. Yeah, 9% loss is a good loss, but most of that loss was caused by me. If I look at the results for last month, no, that's this month. For June, if I look at most of the losses for last month, The big losses, that is. So these big losses, you know, the 1% losses, basically. Anything over 1%. Yeah. So these positions here, there's 1, 2, 3, 4, 5, 6, 7, 8, totaling somewhere around, I would say, 9 to 10% loss. Yeah. Look at where they are. 4 of them are aggressive drawdown control positions on Aussie New Zealand. 2 of them are aggressive drawdown control positions on yen crosses. There's another one on Aussie New Zealand. There's another 2 on the yen. There's another Aussie New Zealand. There's another yen. Yeah, so all of that loss there, which is probably somewhere around about 12%, is nothing to do with the EA. That is aggressive drawdown control positions taken by me personally. If you take me out of the equation, the account didn't lose 9% last month. It lost less. I caused that loss with aggressive drawdown control positions in the squeeze, which is why I lost money on my own account as well, because I was trying to get out of the squeeze, quite rightly. However, in this account, I was trying to get out of it much more aggressively because it was over leveraged and overexposed. But there's nothing wrong with you know, the EA version of the account. If you take me out of the EA, so if you look at these trades, yeah. So anything that has got a 2, a from, or has H1 mean reversion, yeah, is all taken by the EA. Anything that does not have a comment or is a stop loss is me trading. If you tot up all of those trades and then look at the 9% loss on the account overall, if I hadn't have done any of that, it would be a more drawdown now, but it wouldn't have lost 9%. So again, that again begs the question, you know, do people want to see just 100% what the EA's been doing without me intervening, or do they want to see me trade? You know, if you want to see what the EA's been doing, go and run it in a back tester. Don't need me for that. If you want to see what I do in a problem, in an emergency, that's what I'm trying to kind of get across. The kind of the best of both worlds, if you like, sort of approach, but difficult. The problem I have is if I ask everybody, I get 2 different answers. I can't do everything. I haven't got enough time. So anyway, Steve, 9% is brilliant. Considering what happened last month, yeah, it's. But I have them. You know, typically I have 1 or 2 losing months a year. Last month was one of them. This month will be good. Hopefully, but you know, it won't be good if the yen doesn't sort its life out. If this low breaks on the yen, this month is going to be spectacular. But I've only got 2 positions short on the yen myself. This has got 6, so this is going to do a lot more profit than I will. But my profit will be relative to my loss of 4%. I will make over 4% on these yen drops. If these yens drop today or tomorrow by 2 ADR, I will make more than 5% on my account. Last month's gone. Last month's happened. This is this month, right? Right now, this month, I'm 1.9 down. Why? Because aggressive drawdown control positions just got stopped out on the pound yen just before the yen dropped. Just unlucky. I'm not going to remove these 2 and go, oh, that wouldn't have happened in real life. It did. Those were aggressive positions I put on in real life. That happened. I took a 2% or 2.8% loss so far today. Not going to hide anything. Too many channels out there doing that. Okay, so you're using the EA. How would you stop becoming overexposed? You just don't put those orders on. So the way that I trade is I use the dashboards. Yeah. So there's 2 ways of doing it. You can either pick a select number of pairs to trade and make sure you don't set them up for exposure. So if you're going to trade, for example, stick the EA on Aussie dollar CAD and Aussie dollar Swiss, you cannot now use any of those pairs. Yeah. That's it, right? So if you're going to put the EA on Aussie CAD, whoops, and Aussie Swiss, you can't now use Aussie New Zealand or any of the others, right? So now you need to pick some CAD pairs to trade. So we've got exposure on the Aussie twice. We've got exposure on the Swiss and the Canadian dollar once. So now I'm looking at the CAD Swiss. If I now use the CAD Swiss with the EA, yeah, I cannot now trade that or that. Why? Because I've now got 2 exposures on the Canadian dollar and 2 exposures on the Swiss franc. Yeah. So now going into EuroCAD, I can't use EuroCAD because I've got CAD twice. Euro Swiss, I've got Swiss twice. Euro pound, so I can trade the euro pound. And I can trade the euro yen. Yeah. Euro New Zealand, can I trade that one? No. Why? Because I've got euro twice. Can't trade those two. Moving on to the pound. Yeah. So you can do it that way. The trouble is, and this is the problem with this method and why I don't do this, is if, and this is how the signal was set up. I was running a signal on the marketplace and it was set up on these, on pairs like this. And it was trading, I think, 14 pairs in total out of the 28. So half the market. The trouble is, if now, for example, the Aussie Swiss, the Aussie CAD, the CAD Swiss, the Euro Pound and the Euro Yen for an entire month do that and go sideways, what's going to happen? Nothing. You're not even going to take a trade. Whereas the Aussie dollar, New Zealand dollar went like that and you could have taken a short, a long, a short, a long, made 4%. But you weren't trading the Aussie New Zealand because you'd chosen the Aussie CAD and the Aussie Swiss. Yeah. So if you limit the pairs, you're limiting your ability to make money on what is moving. If the Aussie CAD doesn't move because the Australian dollar's having a sideways month and the CAD's having a sideways month, but the New Zealand dollar's going mental because its interest rates have gone nuts and then it's just had an earthquake and then there's been a change of government and then they've decided to invade Taiwan. Not that that would ever happen, but, you know, you get my point. Aussie New Zealand, you could have made a fortune, but you weren't trading it. So what I do is I use the dashboard. So I'm monitoring this. And basically, when I get an alert to 75 on the Aussie New Zealand, I go, right, let's have a look at the Aussie New Zealand. Yeah, that looks like a fantastic setup. Can I trade Aussie New Zealand? What's my exposure? I've got nothing on, I'm, you know, making it up. I've got nothing on the New Zealand dollar and I've got one long on the Aussie. Brilliant. Okay, I can take an Aussie New Zealand long. Brilliant. I'll get in. Right? If it said I was short twice on the New Zealand dollar, can't take it. I'm exposed on the New Zealand dollar. If I go long Aussie New Zealand, what I'm doing is now exposing myself a third time short on the New Zealand dollar. That's exactly how I teach in the bootcamp. You take the trades based on the exposure available to you. If the best setup in the world comes right now on the Canadian dollar, and I look at it and go, that's the setup of the century, I can't take it. I'm exposed on the Canadian dollar. That's it. So what I do literally is, if I could find it, I wait for the alert to come up. I look at my exposure and go, brilliant. I like the look of that and I can take it because I'm not overexposed. So I open my VPS, I open the pair, well, the pair's already there. They're all running. I just turned off. And I basically turn it on and say, get me in on the next reversal alert. And all my set file is set up to do, literally, is I'll show you. It's the easiest thing to do. So all I do with my set file, oh no, I'm running a test on there. Hang on. I can't do that. I'll do it here. Have I got the set file on here? Don't think I got it on here, but yeah, there we go. We'll use this one. So all I do is I open up the EA. I have the EA running like this. Yeah. And I just turn off all filters, right? So I'm not using any filters. So no RSI filter, no higher time frame RSI filter, no moving average filter, no higher time frame moving average, no ADR filters, nothing. I literally set it up and I say, take 0.25% risk over half an ADR, yeah, and only take shorts. Okay. And literally all this is going to do now is it's going to take every short trade or long trade, whatever you want to set it up to. So you're only going to go long or short, right? I just want to get me into this trade on the next reversal alert, okay? And I want you to space my trades out 3/4 of an ADR, so that would be 0.75 in my case. Yep. And I don't use any TPs. That's it. So literally the EA, all these complicated settings in the EA, the way that I use it is I say, get me in. Next time there's a reverse alert on the M5 chart, get me in. If it works out, I will decide when I exit and I'll look at propulsion gaps to put my targets and I will break it even if I fancy breaking it even. If it goes against me, if it goes 3/4 of an ADR, get me in again and keep doing that until we're out. And then when we're out, I basically go, I can't do it here, but you go to the allow live trading, uncheck it. Okay, that's it, stopped. And then when the next opportunity comes on the Aussie New Zealand, I go back in, I tick allow live trading. Okay. And I just pick the direction. That's all you've got to do. You want to go long or you want to go short? You don't do both because Aussie New Zealand, there isn't really anything good to look at to give you a proper example, but Euro New Zealand, yeah, I mean, let's use that. So Euro New Zealand, I want to go long. So I would literally stick the EA on and say, yesterday we hit ADR, we hit RSI extension on the hourly, stick the EA on there and say, next time you get a reverse alert, get me in long. If it goes 3/4 an ADR, get me in again. And if it goes 3/4 an ADR, get me in again. If it goes 1.5 ADR against me, do a bit of DD control for me. And it does everything. But I pick what to trade based on what my exposure is. And that's the thing that I think everybody's got confused with is they've seen the EA trading everything and thought that's the way to do it. And I've said many times, do not do this. If you're going to do this, you need to drop your exposure, drop your risk down because you are massively overexposing yourself. I don't see a problem with doing it that way if you want to, but you've got to reduce the risk. Trouble is, if you're not in the live room, the times I've been saying that, which was pretty much every day, you wouldn't have done it. So people have got themselves overexposed and multiple strategy trading as well. It's like you're trading the Euro New Zealand. Yeah. If you're long on the Euro New Zealand, you're long on the Euro New Zealand. If you get another signal to go long on the Euro New Zealand and the price is there, you don't take it again, do you? You're in. If it goes against you, you take it. That's a position trade. If it goes up, you don't take another trade because you've had an ADR reversal alert now. So if we get an ADR reversal on the Euro New Zealand, you're not going to get in long again, are you? Well, you might do if it's 3/4 of an ADR or half an ADR or whatever your distancing is. Yeah, you get the point. But that's how I do it. And that's how I've always done it. I've been running this live stream for over 4 years. I've not done anything different for 4 years. Literally. Every day for 4 years, I've been coming in here and I've been going through the RSI dash and the ADR dash. That's what I do. That's what the position trading bootcamp teaches you to do. You take the opportunities when they arrive based on what your exposure on your account is. Nothing's changed. So that's basically it. DAX is still stuck. Still stuck in the long on the DAX. You know, and again, talking about EAs and the ORB EAs taking this trade this morning. I've got it running over here as well. I am stopped out on one. If this doesn't go anywhere in the next hour, I'm putting a break even on that. I'm not going to take a double loss today. I'll just take a single loss. Backtesting, I wasn't involved. So the EA will do a completely different thing in backtesting because it's not watching the market. It's not a human being. It's not reading this as this thing's dead. We're waiting for something. Something's going to explode. If it explodes that way, I don't want it. If it explodes that way, I do. So I will make a decision to move these stop losses up to here. The EA won't do that. Backtesting is as good as the results you backtested. You can look for what are the most common occurrences, but you've got to use your head. That is not going anywhere today. Do you want to be in that when it's not moving? What is the chances of a double-ended stop out happening today? High. So let's just take one stop. Yeah, make the decision yourself. You're the trader. You are not the Holy Grail operator. Does that make sense, Steve? So there's no obvious way to pre-choose the pairs. No. You think about it, right? If before you knew about position trading, before you knew about market reverse alerts EA, before you knew about anything, what as a trader, whatever system or strategy you were looking at, what do you do, right? Forget EAs. There is no EA. You've just done Steve Mauro's course, BTMM, right? He's teaching you to do something. So you're going, okay, right, let's find the pound US dollar. We'll go down to the 15-minute chart. We'll plot a distance away from the Asian range. And when it gets into that little box, we're going to take a short. You sit there and you do that, right? Some clever person invented a dashboard which monitored all the pairs, and all of a sudden it would go, ping, Euro odd's done it. All right, excellent, Euro odd. Okay, so I'm going to now hit the short button because it's moved out of the Asian range up into the grey box, and I need to hit the short button. Yeah, that's basically what you do as a trader. You're not sitting there watching the pound US dollar, waiting for the pound US dollar. Euro odd's just giving you a signal. Trade it. Yeah, so that's exactly, nothing's different. Every single trading strategy under the sun cannot be focused on one instrument and one instrument only. Because if you choose gold, for example, if you are a trend trader, and this is a perfect example. If you are a trend trader and you have picked gold to be your instrument of choice, you haven't had a trend on it for 3 months. Pretty much 2 months. How have you made your money? How have you paid your mortgage? Yeah. But there's loads of stuff that's trended absolutely beautifully. Right? But you didn't do it because you're a gold trader. You trade what's moving. What's going to move next week, next month, next year is not what's going to move this week, this month, and this year. So you have to trade the market that moves. And it doesn't matter which one it is. You pick the one that's extended. So if you have a system or a strategy that is mean reversion, which relies on something extending beyond normal conditions and you waiting for it to pull back, you just pick whatever does it, because everything does it. You just wait for the thing that does it. Right now, those are your opportunities. Yesterday, they weren't there. Aussie New Zealand yesterday was not an opportunity. Today, it is presenting itself as one. And I will be long on the Aussie New Zealand if it pushes down to there. So what I will do is I will stick my EA on the Aussie New Zealand once we get extended beyond the 25 level on the RSI and say next time there's a reverse alert, get me in. That's how you trade. You have to watch it. This is why I keep going on about this holy grail thing that doesn't exist, because there's no EA on the planet that can do this. You could build something to limit your exposure and make EAs not take trades in certain conditions. But do you want to do that? Right? So let's use, for example, the US dollar right now as an example. We haven't got anything on the US dollar that's extended at all. US dollar CAD, we're going to get an ADR hit on this in a minute, right? So in a minute, the ADR dash is going to light up. US dollar CAD, we're going to get an ADR hit by the looks of things at a double top. Is that a good trade or what? It's a previous double top test with ADR out of a propulsion gap after being extended, and RSI will be extended. Sound like a good short? Damn right it is. But your system said you can't take this because of exposure rules on the US dollar, right? And let's say, for example, the other US dollar you've got on is the pound US dollar, right? And that is sitting in plus 0.4% profit. Your target is 0.5% profit. What do? right? What I would do is go, fantastic. Let's shut GU. Let's bank that 0.4% and take this US dollar CAD short, right? So you can't teach an EA to do that, because I'm a human being trader that has seen an opportunity coming up which looks absolutely fantastic, and I've got an opportunity to take it without overexposing myself by making money. Yeah, none of this can be taught into an EA. This is stuff that you have to do as a trader, as if you're going to do that as a trader. Yeah, so there are ways that you can limit your exposure, but all that you're going to do is limit your opportunity at the same time. So if you want to run every single pair, I don't think there's necessarily a massive problem in doing that, because if you want to take 6 positions on the yen every single opportunity, and you normally risk 0.25%, and you will limit yourself to 2 of them, if you reduce your risk to 0.1% and take all 6, you're probably going to have roughly the same drawdown as if you just taken 2 and they went against you. So I think that is probably, and that's what I've set the EA up in here to do, and I'm going to test that and see how that plays out, but I really, it's not something I would necessarily recommend. It might work fine, and if that's the case, then it's a case of going back to the bootcamp and going, right, exposure, this is how it's done, amend them. Right, there is another way to do exposure if you want to, but this is how you have to do it, and this is what you'll have to do to adjust. Because the other thing you got to think about as well is we got 6 exposures long on the yen right at the moment, which means we're short everything against the yen. If, for example, the euro has a news event that comes out which collapses the euro yen is going to come down and potentially hit target. The pound yen, the CAD yen, and the US dollar yen will still remain there. So I have an opportunity to make money on one of those because of euro movement, not yen movement. So you've always got 2 instruments there. Another thing, hedging. I kind of advise against this in the bootcamp. But again, I don't see a problem having 2 longs on the Aussie and 1 short on the Aussie at the moment, because I don't think the Aussie's got a potentially long position or short position. Everything's kind of in the middle or roundabouts. There's no bias on anything, is there? So there's not actually too much problem doing that, is there? Because it doesn't matter which way the Aussie goes. If the Aussie has a news event which sends it flying skyward or south, doesn't matter. One of those is going to turn into a bank. The other 2 are going to go into drawdown, and I will manage them. Yeah. So again, if that happens, like Swiss and Euro at the moment, hedged, don't really care, because I'm looking at the Euro now, and I've got a Euro New Zealand long. So I'm long the Euro against the New Zealand. And we've got, what's the other Euro? Euro yen as a short. So I'm short the Euro against the yen. So there's 2 things that can happen here. The yen could massively spike and have a rally, which means the Euro yen will come down and hit target. Euro New Zealand won't move. If the yen powers up, the Euro New Zealand will come down, that hits target. This thing will remain in that drawdown because the yen is moving, not the Euro. Then, if the New Zealand dollar suddenly rallies massively hard, the Euro New Zealand is going to come down, right? Which takes this into drawdown. If the New Zealand dollar absolutely tanks because of a news event, the Euro New Zealand will spike up, and I will make money on that as well. But look what's happened to the Euro. Euro didn't move. The Euro is totally flatlined. The New Zealand dollar pushed the Euro. The yen pushed the Euro, but the Euro hasn't moved. So there's no problem being hedged on it. If the Euro goes flatline on it, I don't care, because the yen and the New Zealand can make me money and the Euro can make me money. The only downside on this one is if the Euro decides to rally, one will hit TP and one will go into drawdown. So there's so much going on. This is why you're managing a portfolio, and this is why you don't care about stuff that's sitting green. You don't care about it. All that's going to happen is that's just going to go over there. You forget about it. The only focus is this and this. If you want to not focus on this, reduce your risk down so that it doesn't matter if you get into loads of it. That will be a lot smaller. So you're just going to manage more trades, more positions, but you're going to manage. And it's nicer, I think. I'm normally in 6 positions at a time, maybe 7. But I also think there's a nice thing about being in 28 FX pairs at the same time. And you'll be hedged on 28 FX pairs probably, and some of it will constantly bank. So it might actually be a much nicer way of trading. Not something I've ever done because I've always concentrated purely on exposure and making sure that I risk enough to make money. But if you risk less and get into twice as many trades, it has the same effect. Again, no right or wrong. I don't teach any of that in the bootcamp, but it's another option. You know, all we're doing is we're hitting the button. I'm going to hit the button there. I have no idea if it's going to go up or down from there, but I'm going to deal with it when I've hit the button. I can't tell you whether the outcome is going to be positive or negative. I'm in a long on this at the moment. Actually, I just realized. Just looking at the US dollar CAD, but I'm already long on it. So there's a potential short there. I won't be taking it because I'm long. But in fact, the EA might take it because I've readjusted the EA and reset it. So it might actually get in short there. But, you know, I want it to go up to there. I don't want it to bounce there. But half the people in the room will be sitting there going, I really want it to bounce there. And that's fine. I'd be happy for it to bounce there for you. And if it can come back down to there, that'd be brilliant as long as it goes back up to there. You make money, I make money. But it doesn't matter what happens when you press that button. Your odds are 50%. It's going to go up or it's going to go down. And it's whether or not it goes far enough to get to the target that you've set, or you have to take a second position because it moved down not far enough and then pushed up. You got a second on, then you get out. I don't know. No one knows what's going to happen, do they? But what you've got to do is make sure when you're position trading and not using a stop that you do not overexpose your account. So the worst, this account, this actual account that's running, I think the worst exposure this has experienced, I think, is 27%, something like that. Just that I've actually seen myself. And this is fully overexposed with 0.25% risk. Normal, yeah? So this is totally overexposed with normal risk parameters. And it's still absolutely fine. It's working. Just obviously made a hell of a lot more loss last month than it should have done. So hopefully that's helpful, though. I mean, that, you know, it's very difficult to get it right for everybody. And obviously, if we're explaining, and I need to explain more regularly, I think, if I'm going to run multiple things like that so that people understand what I'm doing, which I think is obvious, but it's not always, is it? These market conditions are changing for position trading because either we have a squeeze or a range. How can we adjust to this? You can't. I mean, again, as a trader, it's up to you to identify the conditions. So if a market is squeezing, you want a less sensitive instrument to measure market movement. So for example, with the RSI, let's take the RSI. So there's two things you can do. The RSI is sitting at 21 at the moment. If you want this to be less sensitive, you change it to 28, which means you'll get less signals. But the signals will have to have had the market move a lot further to achieve a signal. Therefore, the market will be more stretched, which there's more chance of a snapback, but you will take a lot less entries. If the market is range bound, you want to reduce the sensitivity of the instrument. So drop the RSI down to 14, for example, which will give you more signals. Because the market's not moving with as much strength, you want that strength monitor to be more sensitive, i.e. get more signals. ADR. Instead of using ADR reversals at 100% in a volatile market, use 150. Adjusting the instrument sensitivity, or 200. You'll get way less signals. The chances of those 200 ADRs reversing are very highly probable, aren't they? Look at the Euro New Zealand today. You had an ADR reversal on that yesterday at 150. There was your signal. There was your entry. What's happened today? Absolutely nothing. Yeah, but nothing wrong with taking that. Even the ones at 150 aren't necessarily always going to play out, are they? So there is no way of changing what you do for an instrument because you don't know when it's going to happen. So, for example, Aussie dollar, New Zealand dollar is a great example of a squeeze. there. Yeah. Huge squeeze, right? But then if you look at the size of that movement there over that period, we were looking at 500 pips off of a 72 ADR. Look at the Aussie dollar Swiss over that period. We're looking at 290 off of 52. Aussie dollar CAD. Yeah, that's not a squeeze. That's just a movement and then a retraction. Yeah, so you're going to get different things happening on different instruments at different times. So you can't adjust for one and not the other. So if you adjust everything on the RSI differently, the ones that squeeze are still going to squeeze. You'll just be in it a little bit later. Again, it's like what you're kind of asking is, how do you predict the future? How do I predict where the next squeeze is going to be and which instrument it's going to happen on? If I knew that, I wouldn't do it, would I? If I'd have known that the Aussie dollar, New Zealand dollar was going to squeeze from the 25th of May, I wouldn't have got in short. I'd have got in long. Again, you're trying to predict the future. This is why systems and strategies fail all the time. And no system or strategy that uses a stop loss will ever really work long term, because the market conditions that you can test on in the past are never, ever going to happen again in the same way as in the future. Go and find me an Aussie dollar, New Zealand dollar 4-week squeeze that moved 500 ADR, moved 500 pips, which is 8 ADR. You won't find one. Didn't happen. Hasn't happened. How can you predict it? How can you plan for it? You can't. You get in, you deal with it. Sometimes they'll squeeze you into a loss. Sometimes they'll squeeze you into a bit of pain and then into a massive profit. Other times you won't be in them because your exposure said, I'm exposed on the Aussie New Zealand. Oh, thank God I was exposed on the Aussie New Zealand when that happened. Otherwise, I'd have been stuck in it. Some people were exposed on the Aussie New Zealand here, didn't take that. They were exposed on the Aussie or the New Zealand, couldn't take it because their exposure said you can't get in. But in here, they got out of some of it and entered there. And they went, oh yeah, that was a lovely trade. They got that out. They were out in 2 positions. They never experienced a squeeze because their exposure told them that they couldn't take the Aussie New Zealand that week. But if you weren't exposed on that week, you probably were in it. Yeah, you can't predict anything. You just get into the market. You manage your portfolio and your positions as best you can when you're in the markets, because you can't know where the market's going to go. Nobody knows where the US dollar is going at the moment. I'm hoping it goes up. I have no clue. If it goes down, I'll deal with it. If it goes up, I'll be out. Yeah. If I knew where it was going, I would go that way. Nobody knows where it's going. This is why all systems and strategies have a high failure rate, and why you don't find so few strategies out there that have more than a 50% strike rate. Everybody's after that 30 to 50% strike rate, because if they get a positive 2R return on every trade, that 30 to 50% strike rate gives them a profitable edge. The trouble is, the only systems and strategies that really produce those results are trend-based strategies. They only occur 20% of the time. 80% of the time, the market is ranging. 20% of the time is what we call a squeeze as position traders. 80% of the time is what we call mean reversion, profit takes. Yeah, this is why we're position traders. 80% of the time, the market is in our favor. 20% of the time, it's in the trend traders' favor. The squeezes are not in our favor. If a squeeze happens that happens like that, we're okay. We can get out. If a squeeze happens like that, we can't. How can you predict that? You can't. How can you predict what the interest rate was going to be yesterday on the Australian dollar? You couldn't. If that had come out at 4.35 yesterday, we'd have a totally different chart today. You can't predict. You can adjust based on what you're seeing. But like I said earlier, what you're seeing now, what's that got to do with tomorrow, right? Let's say, for example, right now we're looking at the US dollar and thinking, all these US dollar pairs are range bound at the moment. I'm going to reduce the RSI down to 14. This evening in FOMC, the Fed come out and say, we've decided actually what we're going to do is we're going to freeze interest rates for the next 6 months, and then we're going to drop them by 0.5% every quarter for the next year just to see what happens. That US dollar is not going to want to be on a 14 RSI. It's going to be on a 28, because you will be on the US dollar in one way or the other for a huge squeeze for the next 2 months. But you won't know that until this evening. And you'll look at it and go, they've not done that before. How can anybody predict what that's going to do? No one can. So if you're trading anything longer than the 5-minute time frame and you're in and out scalping on an intraday basis, there is nothing you can much do to adjust. And all the scalpers, all the range-bound scalpers, I'm in a couple of Discord channels for prop firms, and I'm seeing nothing but people gloating like crazy on yen trades they've taken that have been like 3R, 4R range-bound yen trades over the last week. Why? Because it's all range-bound. Well done. Come back to me when that thing's collapsed and you're trying to catch the falling knife as the CAD yen is coming down. Let's have a look at what your account's doing over the next 3 weeks when the CAD yen intervention goes on and you've never heard of what an intervention is in your life and you've blown 25% of your account. Yeah. Market conditions have changed. Therefore, your strategy that you were using trading the highs and lows of ranges is not working anymore. You haven't got a trend trading strategy? Oh, well. You haven't got a breakout strategy? Oh, well. You've got to adapt. So, that's the beauty of position trading. Our positions are so small, adaptation to market conditions isn't as important. It is with all other strategies. If you are a trader that uses stops and you have a trend strategy, a mean reversion strategy, and a breakout strategy that have proven to have good strike rates over long periods of times, and you run all three at the same time, at some point, one of those will make you a profit overall on that instrument and give you a long-term edge for the year. But people can't run 3 different strategies because mindset teaches you to get into something that suits you personally. EAs, like Strategy Quant, which you can build multiple strategies out, won't care. It will pick trend strategies, it will pick mean reversion, it will pick them, and it will put them all together in a portfolio, which will give you an average curve over a year. That's not what human beings are doing when they're sitting in front of the charts, is it? So if you adapt by changing your indicators on a regular basis, what you're doing is inadvertently system hopping constantly. So if you go, I found the RSI, it is my holy grail. I'm using it. I've used the RSI for about 5 years. Every day. Love it. Every time I change the RSI from a 21 to a 14, I'm system hopping. Because the system I have uses the 21 RSI 75-25 levels. If I change it to the 14 RSI, that's a new system. I've hopped to something new. If I was using the 100 ADR for mean reversion opportunities, and I now start using the 150 ADR, I've hopped. It might be the same indicator, but it's a different system, different strategy, different entry criteria. If I suddenly drop the Aussie New Zealand because I've decided actually after the squeezing I've experienced on it, it's a load of crap, I'm not going to use it anymore, I've hopped. I've taken something out of my portfolio, which historically made me really good money. But now I decided, oh no, I've lost 1% on it. It was a hideous squeeze for 4 weeks. I'm not going to trade it anymore. That thing will produce you 6 or 7% over the next year, but you've removed it. You've lost all that money. You just got to get in and deal with it. So and this is the system hopping mentality that we're all stuck in. And the question you've asked, Michael, is absolutely spot on. How can we adjust? You can't. The market adjusts. If you adjust to the market, by the time you've adjusted to the market will readjust to what you had before. So you end up just being behind the market all the time, which is what candlesticks are. They're painting history. We can't predict the future. Stop trying. Get in, get out, deal with it. There's nothing else you can do. If you try and predict what indicator is going to be best during the summer trading months, which we've never experienced off the back of a Ukraine war in year 2, off the back of a pandemic with interest rates at the levels they are, how the hell are you going to predict what instrument you want to use and what indicator? You can't. This summer might be the most volatile summer we've ever experienced in our lives. It might be the quietest. It might be just normal and a bit quieter than usual. No idea. but I will just trade. And if I find that in the middle of August, I'm sitting at 3.5% profit in the middle of the month, I've got exposure on 2 instruments and 3 trades running, I know that summer trading's crap. What do you want me to do? If I suddenly then go, all right, let's use the 7 RSI instead of the 21 so we get loads and loads of signals, as soon as I get into 6 position trades, the market will pick up and go into a squeeze immediately, and I will have got in at the worst possible time. I will wait for the market to come back to you. Don't try and force the market. You can't force something that is completely random to do your bidding. It will do what it does. If this CAD yen now drops down to 200 ADR today with not one green candle, fantastic. Everybody that's trying to buy the low is getting killed. I'm not, because I'm short. It could fly up and go out the highs today. I haven't got a clue. It's going to do what it's going to do. I don't sit in a bank with a button that I can execute $25 million worth of orders on this thing to make it move. Japanese banks do. And at the moment, it looks like that's what they're doing. But everybody that is range trading at the moment is buying up the lows. What's going to happen next on this next candle? Is there an indicator out there that can tell you what's going to happen on this next candle? No. Just going to do what it's going to do. Steve, okay, damn. So there is no obvious way to pre-choose the pairs now. I think I've already answered that one, haven't I? Giovanni, what's your GU analysis? So at the moment, GU is just sideways. Good example of what we're talking about. So, you know, I took a long there. Or rather, the EA took the long there. Because we were extended, and it was a good opportunity to get in on an M5 reversal alert. At the moment, there's no opportunities. But if I drop that down to a 7, yeah, I could have got in on a short yesterday. I don't know. At the moment, it's not doing anything. It's not, for me personally, you're asking my analysis on it. My analysis is this thing's moving sideways. And if you are a trend trader, there's absolutely nothing you can do. If you're a mean reversion trader, there's absolutely nothing you can do. If you're a breakout trader, you will be looking at yesterday's high and low and waiting for a break. If you are a Steve Mauro beat the market maker trader, you'll be looking at the Asian range and waiting for a break. If you're a London breakout strategy trader, you'll be waiting for this to pop down below that low and then you'll be going long on it. I don't know. There's no fundamental advantage for the pound US dollar in either direction at the moment. I would say it's more of a long than a short based on pound strength and US dollar weakness currently. Fundamentals going forward, pound should be strong. Whether it's going to be stronger than the US dollar is going to be dependent on what news events happen this week with unemployment rates. And I don't know what they will be until Friday. And that's when it will move. John, if you already have a drawdown trade, can you add another? Well, yeah, that's position trading, isn't it? You've got a trade in drawdown. Yeah, you just add another. Yeah. That's the whole, that is position trading, isn't it? I don't understand the question. Trying to expect predictability in an unpredictable industry is a recipe for disaster. This is this is the whole purpose of the ORB EA. Yeah, the opening range breakout EA. Its job is not to predict anything. Its job is to execute a known edge in the market, which is when the market opens, you get one of two things happen: a rotation day or a trend day. Yep. The opening range breakout EA strategy has no idea if the breakout will go long, go short, or will whipsaw. What it knows is if it breaks in one direction and then rallies for the day to a target, it will make money. That is the edge. The edge is it's completely unpredictable. So it's basically flipping a coin. You can replicate the ORB EA strategy by flipping a coin at 5 to 8 in the morning. If it's heads, press the buy button. If it's tails, press the short button. Just make sure that your risk is X and your profit is Y. If X is lower than Y, you make profit. Yeah, but there's no way of predicting anything. I'm predicting a gap fill today or tomorrow. If it's tomorrow, I'm going to lose today. If it's today, I'm going to win today. No one can answer that question but the guy sitting in there executing the stock orders at the moment. If they all start buying these 40 stocks in the DAX today, I'll make money. If they all sell these 40 stocks, I will lose money. I can't predict which way it's going to go. Yesterday's candle's got nothing to do with today's candle, and what happened at the open has nothing to do with the direction today. If the open breaks long, that doesn't mean it's not going to go short. It just means it broke long. There was more orders at the open than there were shorts for the long side. That's all it tells me. Every candlestick tells me whether or not the buyers or the sellers won the last battle. Nothing tells me what's going to happen in the next battle. Yeah, they're fighting on the borders of Ukraine at the moment. Who's going to win? Are they going to push towards Russia or are they going to push towards Ukraine? We'll find out, won't we? No one can predict that. They've all got roughly equal amounts of troops with roughly equal firepower shooting at each other. Who's the most accurate? They're the ones that are going to push forward. Who's got the bigger balls today, the buyers or the sellers? They're the ones that are going to push the market up or down. Can't predict it. Nothing can predict it. You can look for patterns that repeat themselves over and over again in the market and use those to calculate a mathematical edge. Apart from that, you don't know anything. No one does, do they? Again, a question I get asked all the time: what's the best settings for the opening range breakout EA? The ones that make the money that day. Which are they? I don't know, because I don't know what's going to happen that day. I wish I did. But as you say, you can't predict the future, can you? So we haven't got the crystal ball. John Wick's got the crystal ball. I haven't got the crystal ball. He's the man to ask. He knows. No, gold. I'm not going to do that. Right. That's all for this morning. We are getting some progress on the yens, which is good news. Only a drop. Yeah, we had a drop there. Didn't help, did it? So we have double topped, though, on the Aussie dollar yen, for example. And a lot of these, obviously, we know we are double topping on them because we're in a range. So what we want to watch today is these lows. If we break these lows on the yen pairs, there's a probability that we might start a rally to the downside. However, that's exactly what we said when we broke to the downside there, and then we made a new high. So again, nothing is in stone until we've got a solid break and retest and then leg. So if that does start today and we do manage to hold lows, I would hold the yens. Don't forget we've got FOMC this evening. So today, OPEC's going to affect oil. It's probably going to affect the Canadian dollar, which in turn will have a knock-on effect on the US as well. FOMC is going to potentially affect the US dollar, which will also affect everything else. If money gets pushed into or pulled out of the US, it will have to come from and go to somewhere. So there's a good chance that we'll get a good volatility spike off the back of this. If the US decide, or the FOMC decide, that they are going to massively change their stance moving forward, there's a good chance that that will have a continued effect on the yen as well. So there's a lot of stuff today that we could potentially see that's going to move the yen, especially this evening. So most people have got shorts on the yens to some degree. And obviously, because it's been squeezing, we're waiting for that to unravel. So look at previous squeezes. All previous squeezes do the same thing. Aussie dollar, New Zealand dollar. Yeah, every rally has a profit take. Every rally has to have a profit take. Otherwise, the banks cannot make profit. Every rally has to have a profit take. We just don't know the depth of the profit take move. So don't get greedy, but also don't get out just because you can get out. Yeah, don't forget your job is to make money, not to break even. Yeah, so depending on how many pairs you've got on, I've got a couple of pairs short on the ends at the moment. I'm holding out for a nice profit take. What I'm hoping for is a big ADR day that sits and accumulates. Look at the Euro New Zealand. This would be absolutely perfect. Yeah. Big, strong move, accumulation, because that opens up the doors for a second day push. And if you get the second day push, you can forget all last month's losses. They're all going to get taken back, aren't they? So just be aware, obviously, of what's going on with these yens. It's looking positive at the moment, but we are range bound, yeah, and the limits will be sitting at the lows, ready to buy. So ADR today is likely to get some kind of resistance. Don't be shocked if you get a bounce off the lows. But let's see what happens at FOMC. And then we'll have a look tomorrow. But I'll be back this afternoon at 2:20 anyway. We'll trade the US indices. I would expect a big push off the indices today. We had a bank holiday yesterday. Therefore, there will be a lot of orders stacked up, ready to go. They are actually moving already pre-market. So we have got some movement already. So yeah, we might get some ADRs before the market opens, which means we might get a quiet one, but we'll see. But I'll be back this afternoon, 2:20. We'll trade those, see how it goes. Yeah, and then see where we are from there. All right, so have a good morning. What's left of it? I'll be back at 2:20 and back at 7:50 tomorrow morning, same time as usual. We'll have a look at everything and go from there. All right, have a good one.